Hi guys, through this session I want to give you all a quick revision of the TDS TCS chapter. The reason why I've chosen this just before the exam is a lot of students actually think of skipping these two chapters before the examination because there is a sort of discomfort here, I don't deny. There's a lot to remember. But I will try to simplify this for you as much as I can. I really hope you don't think of skipping this anymore. The reason is number one, this chapter has good weightage, all right. You can expect easily between around 8 marks, you can expect from here, number one. And number two, guys, if you get questions from this chapter, they will not have too much computation. You will not have a lot of thinking to do. It will be just an application of the concept. So it's all a game of memory. All right. If you learn it, if you remember it, you will be able to do it. There is no scope of silly mistakes and all here in this chapter. Hence, I really hope you don't think of skipping this anymore. So with that objective, I'm doing this revision for you. By the time you finish this revision, if I want you guys to tell me in the comment section, once you finish this revision, are you still thinking of skipping this chapter or are you confident? I would really like to know if I've made this chapter even one bit easy for you guys. All right. I just hope at the end of this, you're all ready to take on this chapter in the examination. Let's begin. First of all, I'm going to go section after section and discuss the TDS provisions with you all. First of all, talking about section 192. Section 192 is all about TDS on salary. See, I have two people, employer and employee. Employer pays salary to the employee, right? At that time, the employer is the deductor. He is supposed to deduct tax at source. At what rate? There's no specific rate here. We will see whatever are the applicable tax rates. For the employee, whatever is the applicable tax rate, whatever, basically on the basis of his slab rate. On the basis of the applicable slab rate, the employer will calculate the tax and deduct. So point number one, who is the deductor? The employer. He will deduct tax on the salary which he pays to the employee. On the applicable slab rate, he will calculate the employee's tax liability, and on that basis, he will deduct tax. Now, when will he deduct tax? He will deduct tax at the time of payment. When he pays salary to the employee, at the time of payment, he will deduct tax from the salary. You understood this part? How is TDS calculated? See, simple, okay. The employer will calculate employee's total income. In calculation of total income, if employee wants, employee can inform the employer his other incomes, his other losses also. But see, losses he can declare only house property loss. Employee will tell the employer if he wants his other incomes and his house property loss. And in case he has any chapter 6A and all, employee will inform the employer. On that basis, employer will calculate total income of the employee. On total income, what is the tax liability he will calculate. That tax liability, little by little, month after month, he will deduct at source from the employee salary. That's how it generally works. So employee, if he wants, employee can inform the employer about his other incomes. But losses, he cannot inform the employer. Only loss he can inform is house property loss. He can also inform the employer what are the chapter 6A deductions that he is eligible for. On that basis, he'll calculate his tax liability and the employer will deduct tax. Now, some special points. In case the employee wants HRA exemption, if he wants HRA exemption, then he has to provide rental receipt to the employer. If he wants HRA exemption, he has to give proof of the rent expense that he has. But this rental receipt is required only if the rent is greater than or equal to 3,000 per month, which means if the rent is less than 3,000 per month, no need to give any rental receipt. Also, if he wants HRA exemption, he also has to inform the employer what is the PAN of the landlord. But PAN of the landlord is required only if the rent is more than 1 lakh per annum. Please notice the signs here greater than or equal to, here greater than. Rental receipt is required if the rent is at least 3,000 per month, and PAN of landlord is required if the rent is more than 1 lakh per annum. Till here, are we clear with all the points? Yes, this is section 190. All right, guys. And then after the year is over, employer will give to the employee Form 16. This Form 16 will be a sort of a summary that how much tax was deducted, the tax calculation and all. And in this Form 16, one part of it, Form 12BA, will also be given to the employee. This Form 12BA will contain all details of perquisites. So this is it about Section 192. What are the points we learned? Employer is a deductor. He pays salary to the employee. At that time, he deducts tax at the time of payment. He'll deduct tax on the basis of the applicable slab rates. Employee will inform the employer if he wants his other income and also his loss from house property and Chapter 6A deductions. If he wants Hra exemption, he has to give rental receipt if the rent is at least 3,000 per month. And he also has to give PAN of landlord if the rent is more than 1 lakh per annum. This is Section 192. Then coming to the next section so this was section number 1, let's say. Then coming to the next concept, Section 192A. Under Section 192A, what happens is the Provident Fund is giving money to the employee. Basically, the employee is withdrawing from the Provident Fund his contribution. Employer, employee both are contributing to the Provident Fund every month, right? Later, employee is withdrawing money from here. If this money is greater than or equal to 50,000, then the Provident Fund will be the deductor. The Provident Fund will deduct tax. Now, when will the Provident Fund deduct tax? They will deduct tax at the time of payment. When they make the payment to the employee, at that time they will deduct tax. They will deduct tax at the rate of 10%. Okay, so under Section 192A, when an employee withdraws money from the Provident Fund, the Provident Fund will deduct tax at the time of payment in case the amount of withdrawal is greater than or equal to 50,000. Even if it is equal to 50,000, Provident Fund will deduct tax. They'll deduct tax at source at the rate of 10%. But obviously, this section will not apply. No need to deduct tax if the employee has rendered service, continuous service for at least 5 years, or even if the employee rendered less than 5 years service, but it was because of a reason beyond his control. For example, employer itself shut down his business in less than 5 years, and that's why employee had to leave. In that case, even though it's less than 5 years, it's okay. This section will not apply. Then also, if he left in less than 5 years, but he went and joined another employer, and even that other employer is maintaining PF. Okay, so he was working with employer 1. He left employer 1. He went and joined employer 2. Employer 2 is also maintaining PF. Employer 1's PF balance is being transferred to employer 2. Okay, and total, both the employers put together, he has worked for more than 5 years. Then also 192A will not apply. Basically, all this you must have learned even in salaries discussion, guys. You must have learned when is the withdrawal not taxable. Same thing. If this withdrawal is going to be exempt for the employee, then Section 192A will not apply. When is the withdrawal exempt for the employee? It is exempt for the employee when the employee has rendered at least 5 years service, or when the employee has rendered less than 5 years service, but it is because of a reason beyond his control. For example, employer itself has shut down business, or he is resigning from one employer and going and joining another employer, and both are having PF. From employer 1's PF account, he hasn't withdrawn money. Employer 1's PF balance is as it is transferred to employer 2's PF. So in such cases, you will, for the employee, the withdrawal will be exempt. For the employee, if it is exempt, PF under 192A TDS will not be deducted by the PF authorities. Okay, so this is about our discussion regarding 192A. First, we spoke about 192, then we spoke about 192A. Under 192A, the Provident Fund is giving money to the employee. Employee is withdrawing money from the Provident Fund. So the PF authorities at the time of withdrawal, at the time of payment, they will deduct tax at the rate of 10% if the amount being withdrawn is at least 50,000. Even if exactly 50,000, they will deduct tax at source, but they will not deduct tax at source if the withdrawal is exempt for the employee, and you know when it is exempt for the employee. This is Section 192A. Now coming to the third section, the third discussion, Section 194. This is regarding dividend. Listen carefully, a good section. Here, I have two people in the story, domestic company and a resident shareholder. So here what happens is when the domestic company pays dividend to the resident shareholder, the domestic company will be the deductor and they will deduct tax at source at the time of payment. When they make the payment, instead of payment, here we can also use the word distribution because we distribute dividend, right? So the domestic company at the time of payment or at the time of distribution, they will deduct tax at source. They will deduct tax at source at the rate of 10%. 10% will be the applicable rate. But if the shareholder happens to be LIC, or if the shareholder happens to be GIC, or if the shareholder happens to be any subsidiary of LIC GIC, then in that case, section 194 will not apply. If the shareholder happens to be these entities, then section 194 will not apply. They will not deduct tax at source. And also, if this dividend is being paid in non-cash mode, and if its value is less than or equal to 5,000, also then in that case also section 194 will not apply. A very simple section. This dividend, guys, here, it doesn't matter what kind of dividend it is. It may be 224 A dividend, 224B dividend, 224C, D, E, it doesn't matter. It may be any of the dividends. Are we clear with this? Yeah, 222, not 224. So when the domestic company pays dividend to shareholder, no matter what kind of dividend, at the time of payment, they will deduct tax at source at the rate of 10%. But when they need not deduct tax at source, if the resident shareholder happens to be LIC, GIC or subsidiaries, then no need to deduct tax at source. Also, if this dividend is being paid in non-cash mode or if it is within 5,000, no need to deduct tax at source. Got it, guys? This is it about our discussion regarding section 194. Three sections we've learned: section 192 regarding salary, 192A regarding PF withdrawal, and section 194 regarding dividend. What we learned under 194, very similar, we have 194K. 194K talks about income from units. Just like how from companies, from shares of companies, we earn dividend, from units of mutual funds, we earn an income, and on that section 194K applies. So here we have two people in our story, mutual fund or UTI. They are making payment of any income to a resident person, to a resident unit holder. Basically, I bought some units of a mutual fund or I bought some units of UTI. Just like how for shares I get dividend, for units also I'll get one income. If this income is more than 5,000 rupees, then the mutual fund or UTI, they will become the deductor. They will deduct tax at the rate of 10%. When will they deduct tax? Same thing, they will deduct tax at the time of payment. Okay, so section 194K, my deductor happens to be mutual fund or unit trust of India. And when they're paying income to me, to the resident unit holder, if it is more than 5,000, they will deduct tax at source at the rate of 10% at the time of payment. All right, guys. So we've learned 4 sections. Section 192, which was about salary. Section 192A, which was about PF withdrawal. Section 194, which was about dividend. And section 194K, which was about income from units. In all the 4, tax is deducted at source at the time of payment. Okay, in all the 4, tax is deducted at source at the time of payment. Before I go further, one more thing I want to discuss with you under section 192. See here, if the salary happens to be less than or equal to basic exemption limit. If the salary is within basic exemption limit, it's going to be exempt for the employee, right? In those cases, section 192 TDS obviously not required. If the income is going to be exempt for the employee, if it is within basic exemption limit, under 192, no need to deduct tax at source. So section 192 salary, 192A PF withdrawal, 50,000, here we learned. 194 and 194K, both 5,000 limit we learned. In 192, we deduct tax at source at the applicable slab rate. 192A, 194 and 194K, in all of them, we deduct tax at source at the rate of 10%. 192, if the tax, if the salary is within basic exemption limit, no need to deduct tax at source. 192A, if it is less than 50,000, no need to deduct tax at source. 194 and 194K, if the amount is less than 5,000, if it's up to 5,000, then no need to deduct tax at source. Okay, only if it is more than 5,000, we deduct tax at source. If it is up to 5,000, we don't deduct tax at source under 194 and 194K. First 4 sections thorough, guys. Yes, now listen to the next set of sections. Next, I'm going to be discussing with you about section 193. Under section 193, we have a person who is making a payment of interest to another person. This interest is interest on securities. Basically, this person green may be a debenture holder, let us say, or he may be a bond holder, or he may be any other security holder. On that, he is getting interest from a person. Now, this Mr. Green, obviously, he has to be a resident debenture holder, a resident security holder. He is holding securities, and this person blue will obviously be a company. Company is paying interest on securities. Now, this company, this Mr. Blue, he is going to become a deductor, and he is going to deduct tax at the time of payment or credit, whichever is earlier. He will deduct tax at source at the time of payment or credit, whichever is earlier. He will deduct tax at source at the rate of 10%. Until here, are we clear? Giving you a quick revision, under section 193, my company is paying interest on securities to a resident person, a resident security holder. At the time of payment or at the time of credit, whichever is earlier, at 10%, the company deductor will deduct tax. But if the debentures, if the securities happen to be listed securities, or if the interest happens to be less than or equal to 5,000, and if it is also paid by account payee check, in these two cases, section 193 is not applicable. Section 193 is not applicable if the securities are listed securities, also not applicable if the interest is up to 5,000. Also, in case the securities happen to be 6.5%, 6.5% gold bonds, or if they happen to be 7% gold bonds whose face value is less than or equal to 10,000, even then section 193 is not applicable. So under section 193, my deductor at the time of payment or credit of interest on securities, he will deduct tax at source at the rate of 10%. But he will not deduct tax at source if the securities are listed securities, or if the securities happen to be 6.5% or 7% gold bonds with face value up to 10,000. Also, if the interest is up to 5,000, they will not deduct tax at source. This is about section 193. What are the limits? Section 192, basic exemption limit. 192A, if it is less than 50,000, no TDS. Greater than or equal to 50,000, there will be TDS. 194 and 194K, up to 5,000, no TDS. More than 5,000, there will be TDS. Section 193, up to 5,000. Even here, up to 5,000, no TDS. Only if it is more than 5,000, there will be TDS. Also here, please remember this. This is important. 6.5% and 7% gold bonds with face value up to 10,000, no TDS. One more point, if the securities happen to be government securities, like central government or state government securities, even then section 193 will not apply. Okay, guys. So 5 sections we've learned. Section 192 relating to TDS, relating to salary, 192A relating to PF, 194 relating to dividend, 194K relating to interest on units, and 193 relating to interest on securities. Okay, now I'll take you to the next section after this, section 194A. This is going to be an important section. Until now, the sections that we learned, they were not so important, but the next section, this is going to be very important, guys, section 194A. Here I'm talking about interest, but other than interest on securities. I'm not talking about interest on securities. I'm talking about other interest, for example, interest on loans, interest on bank account deposits, and so on. All right. Now here, what happens is there is a person, let us say Mr. Blue. This Mr. Blue is making payment of interest to this person, Mr. Green. This green obviously has to be a resident. So when he's making the payment of interest, this Mr. Blue, he is going to become the deductor. The payer of interest, he will deduct tax. When will he deduct tax? At the time of payment or at the time of credit, whichever is earlier. But then, this Mr. Blue may either be an individual or a HUF, or this Mr. Blue may be any other person. If he happens to be individual or HUF, he will become a deductor only if preceding previous year turnover is more than 1 crore, or if he's into profession, preceding previous year gross receipt is more than 50 lakhs. Only then he will become a deductor. Other persons, all of them I will consider. I will not look at their turnover and all. Individual or HUF, they will become deducted under 194A only if preceding previous year turnover is more than 1 crore or gross receipts are more than 50 lakhs. Then when this deductor is making payment of interest obviously other than interest on securities, that time he will deduct tax at source. He will deduct tax at source at what rate? He will deduct tax at source at the rate of 10%. Until here clear, a person is making payment of interest other than interest on securities. This person, if he happens to be individual or HUF, his preceding previous year turnover was more than 1 crore, or his preceding previous year gross receipt was more than 50 lakhs. All right, then, or if he's any other person, either he should be individual HUF fulfilling this criteria, or he must be any other person like company, LLP, firm and all. These persons, when they are paying interest, at the time of payment or credit, whichever is earlier, they will deduct tax at source at the rate of 10%. But up to how much they can deduct tax at source? Up to how much they can pay without deducting tax at source? You have to see who is a deductor. This deductor may be banker, or this deductor may be any other person. Now, along with banker, I'll put two more people. I'll put even cooperative banks, and I'll put also post office. If the deductor happens to be banker, cooperative bank, or post office, then you see who is the payee or who is a recipient. This payee may be a resident senior citizen, or he may be any other person. If he's a resident senior citizen, the banker can pay to him up to 50,000 without deducting tax at source. If the banker is making a payment to any other person, banker can pay up to 40,000 without deducting tax at source. If any other person is making the payment, that person can pay only 5,000 without deducting tax at source. So in these situations, section 194A will not apply. When will 194A not apply? The person making the payment, you have to see who is the person making the payment. The person making the payment, is he a banker? This person, Mr. Blue, is he a banker, cooperative bank, or post office, or any other person? Any other person, up to 5,000 he can pay interest without deducting tax at source. More than 5,000 he'll have to deduct tax at source. Any if it happens to be banker, cooperative bank, or post office, then up to 50,000 they can pay without deducting tax at source. If the recipient happens to be a resident senior citizen, but if this recipient happens to be any other person, they can pay 40,000 without deducting tax at source. This is section 194A. But there are also a lot of interest payments on which section 194A is not applicable. For example, 194A is not applicable on savings bank interest. On savings bank interest, 194A TDS will not be deducted. Then when the partnership firm pays interest to its partners, even here 194A TDS is not deducted. Then when any person makes payment to banker, like when I pay interest on loan to the banker, on that interest I will not deduct tax at source. When I pay interest to the banker, when I pay interest to LIC, when I pay interest to UTI, when I pay interest to any insurance company, here and all I do not deduct any tax at source. Also, when I pay any interest to National Skill Development Fund, or if I pay any interest to HUDCO, Housing and Urban Development Corporation, in all these places I do not deduct any tax at source. Also, in case I'm earning any interest from non-resident external account, even here there will not be any tax deducted at source at all. All right, and one more thing, remember guys, if the deductor happens to be a bank, and if the bank is following core banking solution, then these limits will be applied to all the branches put together. If the banker is following core banking solutions, and let us say I have a bank account in Andheri branch, I also have a bank account in, let us say, Andheri West branch, I also have a bank account in, let us say, Erode branch. So in that case, all the branches put together, you will see how much interest. On the total interest, you will apply these limits. Otherwise, if the bank is not following CBS, then each branch separately. If the bank is following CBS, all the branches put together, you will apply the limits. Okay, guys, you know all these concepts. I'm just giving you a revision. Come on, guys, repeat along with me. What does 194A say? 194A, I am paying interest to you. Who am I? If I'm an individual or HUF, my preceding previous year turnover was more than 1 crore, or my preceding previous year gross receipt was more than 50 lakhs, or I'm any other person other than individual HUFs. Now I am paying interest to you at the time of payment or at the time of credit, whichever is earlier. At the rate of 10%, I will deduct tax at source. But how much can I pay to you without deducting tax at source? How much I can pay without deducting tax at source depends upon who the deductor is. Is a deductor a bank, or is a deductor any other person? If the deductor is bank, you have to see who's the recipient. Is the recipient a resident senior citizen, or is the recipient any other person? If the bank is paying to resident senior citizen, bank can pay up to 50,000 without deducting tax. If the bank is paying to any other person, bank can pay up to 40,000 without deducting tax. Any other person is paying interest, that person can pay up to 50,000 without deducting tax. I'll give you a summary of this with the help of a diagram. If a bank or a cooperative bank or a post office is making payment of interest to a person, then they can pay how much without deducting tax depends upon who this person is. If this person happens to be a resident senior citizen, they can pay up to 50,000 without deducting any tax at source. But if the same bank, cooperative bank or post office is making payment to any other person who is not a resident senior citizen, to them they can pay interest up to 40,000 without deducting any tax at source. If any other person is making payment of interest to a person, whether he's resident senior citizen, not resident senior citizen, doesn't matter, this interest up to 5,000 alone they can pay without deducting tax at source. Now understood? Now you have clarity. So how much you can pay without deducting tax at source depends upon who the deductor is. If the deductor is bank, then it depends upon who the recipient is. If the recipient is resident senior citizen, they can pay 50,000 also without deducting tax at source. If the recipient is not a resident senior citizen, they can pay 40,000 without deducting tax at source. Any other person is paying interest, they can pay 5,000 without deducting tax at source. This is it about our 6th section. Then I also told you there are some interests on which we don't subtract, on which we don't deduct TDS. Savings bank interest, interest paid by the loan by the firm to the partners, interest paid to the bank, interest paid to LIC UTI, interest paid to National Skill Development Fund or HUDCO, interest paid to any insurance company. Then whatever interest I get under NSC, whatever interest I get under Kisan Vikas Patra, here and all, nobody will deduct tax at source. And whatever interest I get under NRE account, non-resident external account, I will not have any TDS. Then I told you, in case this person, the deductor happens to be a bank who's following CBS, then these limits you will apply to all the branches put together. This is it about section 194A, guys. 6 sections. I hope you are thorough. Section 192, salary. The employer can pay up to basic exemption limit without deducting tax at source. If you want Hra exemption, up to 3,000 rent, if you're paying rent at least 3,000 per month, you have to give rental receipt. You have to give landlord span if the rent is more than 1 lakh per annum. Please remember, guys, small things we have here. Repeat along with me, because there is so much to remember here. I'm giving you a revision again and again. Section 192A, less than 50,000 we can pay without deducting tax at source. At least 50,000 if I'm paying, I have to deduct tax at source. Even equal to 50,000, we have to deduct tax at source. 190C, section 192A is different. Here alone, we say less than 50,000 you can pay without deducting tax at source. All other sections until now, we said up to so much you can pay without deducting tax at source. 192A alone, we said less than 50,000. 194 dividend. Here also up to 5,000 you can pay without deducting tax at source. 194K mutual fund. Even here up to 5,000 you can pay without deducting tax at source. 193 interest on securities. Even here you can pay up to 5,000 without deducting tax at source. But here you don't have to deduct tax at source if it's a listed security, or if it's 6.5 or 7% gold bonds with nominal value up to 10,000, or if it's central government, state government security. 194A up to 50,000, up to 10, up to 40,000, up to 5,000 we can pay without deducting tax at source. Okay, so these are our 6 sections until now. Till here, I hope you are thorough. Now coming to the next section, the 7th section. Here I'm discussing with you about section 194B. Here we're talking about lottery winnings, your crossword winnings, your winnings from puzzles, your winnings from betting, winnings from gambling, and so on. In case any person is making a payment of any of these to a person who is a resident of India, then this person has to deduct tax at source at the rate of 30%. The deductor will deduct tax at source at the rate of 30%. All right. Now, when will he deduct tax at source? He will deduct tax at source at the time of payment, not at the time of payment or credit. Just at the time of payment, tax will be deducted at source at the rate of 30%. Tax will be deducted at source. In case the prize money happens to be in kind, if it happens to be partly in cash and partly in kind, then from the cash portion, we will deduct the entire amount. Basically, if it is partly in cash, partly in kind, we will find the total value. What is the amount in cash? What is the value of the thing in kind? Total value, you will calculate 30%. The 30% you will deduct from this cash amount, balance you will give. If it happens to be fully in kind, then you will ask the recipient to give you the TDS portion, and only then you will release. For example, let us say the lottery prize was a car. Okay, so before you can release the car, you will calculate 30% of the value of the car. You will tell the winner of the prize to give you that 30% amount, only then you will release the car. All right. So if it happens to be in kind, the recipient, this person, has to give the TDS amount to Mr. Blue, to the deductor, and only then the gift will be released. All right. This is about section 194B. Very similar, we have section 194BB. This talks about winnings on horse races, winnings relating to horse races. From winnings from horse races, here the even here the TDS rate is same, 30%. Even here, tax will be deducted at source at the time of payment. At the time of credit and all, we will not see, we will just see at the time of payment. In both guys, whether 194B, whether 194BB, up to 10,000, the person can pay without deducting any tax at source. So 194B is regarding winnings from lotteries, crossword puzzles, gambling, betting, card games and all. 194BB is just on winnings from horse races. Even here 30%. Okay, totally 8 sections we have discussed. Now, before I go to the next section, I want to give you one comprehensive discussion, one comprehensive revision of these 8 sections. Section 192, this was regarding salary. Up to the basic exemption limit, we can pay without deducting tax at source. Beyond that, depending upon the slab rates, we'll have to deduct tax at source. Section 192A was about PF withdrawal. Less than 50,000 we can pay without deducting tax at source. Tax rate applicable is 10% over here. Okay, then we learned about section 193. No, before that we learned about section 194 relating to dividend. Here we can pay less than 5,000 without deducting tax at source, and here also the TDS rate was 10%. Then we learned about section 194K. This was relating to interest relating to units of mutual funds. Here, guys, it here is less than or equal to, okay, up to 5,000 we can pay without deducting tax at source. More than 5,000 they will deduct tax at the rate of 10%. Till here, first 4 sections. One more thing, remember when I told you 194 dividend, we said we'll cover all kinds of dividend, whether it's 222A, B, C, D, E, doesn't matter. And all the 4 we said we will deduct tax when? At the time of payment. Okay, then after these 4 sections, we learned about section 193. This was about interest on securities. Here also we said up to 5,000 can be paid without deducting tax at source. Even here we said 10%, but here tax will be deducted at the time of payment or credit, whichever is earlier. Here we saw a lot more points. Here we said if they're listed securities or if they're 6.5% or 7% gold bonds with face value up to 10,000, central government, state government securities and all, no need to deduct tax at source. Then we learnt about section 194A. Here we had a very important point. Here we said deductor. If he's an individual or HUF, preceding previous year turnover should be at least more than 1 crore. Preceding previous year gross receipt should be more than 50 lakhs. Any other person fine, but if individual or HUF, 194 will apply, 194A will apply only if preceding previous year turnover is more than 1 crore or gross receipts are more than 50 lakhs. Under 194A, we talk about interest other than interest on securities. Here also we deduct tax at the rate of 10%. Here also we deduct tax at the time of payment or credit, whichever is earlier. But here, how much we can pay without deducting tax at source? Here we have three numbers, 50,000, 40,000 and 5,000. If bank or post office is paying interest, if the recipient happens to be a resident senior citizen, they can pay 50,000 without deducting tax at source. If recipient happens to be other than resident senior citizen, they can pay 40,000 without deducting tax at source. Any other deductor can pay 5,000 up to 5,000 without deducting tax at source. Then we learned about section 194B and section 194BB. 194B was about lottery winnings, card games and all. 194BB was about horse race winnings. In both, we said we can pay up to 10,000 without deducting tax at source. In both, the tax rate was 30%. And in both, when do we deduct tax? Only at the time of payment. We said if the prize winnings are fully in kind, we will tell the recipient to give the TDS amount first, only then we will release the gift. Again and again, I'm giving you a revision because there's a lot to remember here. I want you to be able to recall. Keep repeating along with me. Repeat it out loud. Let your mind hear what you're saying, all right? Let it get registered in your memory. You will do fine. Your exam will go perfectly fine. Be calm and learn concept after concept. You will be okay. All right, so totally how many sections we are done learning already? 5, 6, 7, 8, 9. How 9? 6, 8 sections, right? We're done learning with 8 sections until now. Now listen to the next section, guys. Another important section, our 9th discussion, section 194C. Listen carefully, important. Here I have a person who is making a payment to another person. This person happens to be a resident. All right. Now he is making a payment relating to a works contract. Now, who is this person? Same thing like what we learned under 194A. He may either be an individual or a HUF, or he may be any other person. If any other person, fine. If he's individual or HUF, preceding previous year turnover should be more than 1 crore, or preceding previous year gross receipt should be more than 50 lakh, only then this section will apply to him. This person, at the time, he's a deductor, at the time of payment or credit, whichever is earlier, he will deduct tax at source. Now he will deduct tax at source at what rate? At what rate depends upon who the recipient is. If this recipient happens to be individual or HUF, he will deduct tax at source at the rate of 1%. But if this recipient happens to be any other person, then he will deduct tax at source at the rate of 2%. So 194C, at what rate the tax will be deducted depends upon who the recipient is. If recipient is individual or HUF, then they will deduct tax at the rate of 1%. If the recipient happens to be any other person, they will deduct tax at the rate of 2%. Now, how much they can pay without deducting tax at source? Single transaction up to 30,000 they can pay without deducting any tax at source. Aggregate all the transactions in the year, they can have up to 1 lakh without deducting tax at source. So single transaction up to 30,000, no need to deduct tax at source. Aggregate all the transactions in the year put together with that same contractor. If it is up to 1 lakh, we do not have to deduct any tax at source. All right, till here understood. Now, what do we mean by works contract? Meaning of works contract, A, B, C, C. A stands for advertising. B stands for broadcasting. Guys, remember, these are only examples of works contract. These are those examples which are peculiar examples, which you wouldn't have thought is works contract. We're talking about those examples. Works contract can be other contracts also, but these four are special cases, important cases: advertising, broadcasting, then carriage of goods and catering. Advertising, broadcasting, carriage of goods. It can be carriage of goods also, carriage of passengers also, by any mode of transport, but it should not be railways. Carriage of goods or passengers by any modes of transport other than railways, and catering. Apart from these four, there is one more very important transaction which is covered under works contract. See, listen. When this person, Mr. Blue, gives material to green, okay, and this green does some processing on this material on the basis of requirements which are specified by blue. Take one simple example. I'll give you two situations. In my first situation, blue is giving papers to green. Okay, blue is also giving instructions to green that how these papers have to be bound. Mr. Green is binding all these papers into a book, and the bound book he is giving to blue. This is a works contract. Why? Because blue only is supplying material. Blue, he is supplying material. He is also giving instructions. On the basis of those instructions, green is working on that material and making something and giving to blue. This is a works contract. On the other hand, if blue is going to tell green that you itself buy the paper and you bind and give, if green itself buys the paper and bounds them and gives the books to Mr. Blue, this will not be works contract. This will be a sale. Here section 194C will not apply. So 194C will apply only if the material is given by Mr. Blue. If Mr. Green is buying the material by himself, if the recipient is buying the material by himself, then it will not be works contract, because then it becomes sale. Okay, see, who should be giving the material? Either blue should be giving the material or his associate should be giving the material. And he should be giving instructions on the basis of that, on that material, he is going to do the work and he's going to return. This will be works contract. But if green itself goes and buys the material and comes, then it becomes sale, then it is not works contract. All right, we have a very special situation here. One special situation, remember, if this person, Mr. Green, happens to be a transport operator, as in, for example, he's in the business of plying, hiring, or leasing goods carriages. In simple words, he's a truck operator. Plying, hiring, leasing goods carriages, condition 1. Condition 2, he gives his PAN number. He is giving his PAN number. Condition number 3, he does not have more than 10 trucks. At any point of time in the year, he has within 10 trucks only. And he's also giving a declaration to the deductor that all these conditions are fulfilled. If all these conditions are fulfilled, then section 194C will not even apply. No need to deduct any tax at all. Got it, guys? I'll go slow. I'll give you a revision on 194C. In 194C, the deductor, if he's an individual or HUF, preceding previous year turnover is more than 1 crore or gross receipts are more than 50 lakhs. If he's not individual HUF, can be any other person, don't have to look at turnover and gross receipts. This person, this deductor, is making payment relating to works contract to a resident. Works contract could include even advertising, broadcasting, catering, carriage of goods and passengers by any mode of transport other than railways. Also includes those cases where I supply material, I also give instructions, and that person, the resident, that Mr. Green, he is working on those materials on the basis of my instructions and giving me the products. But if I tell Mr. Green, you itself go and buy the material and come, then that will become a sale. That will not be works contract. Okay, so this person, Mr. Blue, two people, blue and green. Remember, all my examples, deductor is Mr. Blue, the recipient is Mr. Green. Deductor is Mr. Blue, deductee is Mr. Green. Okay, now at what rate will the deductor deduct tax? He will deduct tax at the rate depending upon who the deductee is. If the deductee happens to be individual or HUF, he will deduct at the rate of 1%. If the deductee happens to be any other person, he will deduct tax at the rate of 2%. Up to 30,000 per transaction you can pay without deducting any tax. But once the aggregate exceeds 1 lakh, then you will have to deduct tax at source. then when you deduct tax at source at the time of payment or credit, whichever is earlier. Then we said, in case of Mr. Green, the deductee, if he happens to be a transport operator, a person who's in the business of flying, hiring, leasing goods carriages, and he's giving his PAN also, and he does not have more than 10 trucks at any time of the year, and he's also giving a declaration to this in this regard, then if all these conditions are fulfilled, in that case, Mr. Blue does not have to deduct tax at source. If Mr. Green is fulfilling all these conditions, Mr. Blue does not have to deduct tax at source. This is section 194C, very important section. Until now, two important sections we've learned, section 194A and section 194C. Okay, guys, now listen to my next discussion. Next, I'm going to be discussing with you about three sections, one after the other, all the three sections connected with commission. All right, listen. 10th section, section 194D. Then I will be discussing with you about section 194G and then section 194H. All the four sections are dealing with commission. We'll go one by one. Section 194D talks about insurance commission. I have two people in my story, Mr. Blue and Mr. Green. This Green is an insurance agent and this Mr. Blue is an insurance company. This Green is getting insurance work for the insurance company and hence Mr. Blue is giving commission to the insurance agent. If this commission is up to 15,000, then no need to deduct tax at source. If it is more than 15,000, then this insurance company will become the deductor. They will deduct tax at source at the rate of 5%. They will deduct tax at source at the time of payment or credit, whichever is earlier. Okay, so Mr. Blue is making payment of commission to a resident insurance agent. This insurance commission, if it's up to 15,000, no need to deduct tax at source. If it is more than 15,000 at the rate of 5% at the time of payment or credit, whichever is earlier, they will deduct tax at source. This is section 194D. Something very, very similar, we have section 194G. This is relating to lottery commission. If I'm going to make payment to any person who is going to sell lottery tickets on my behalf, then even over here, same thing, guys, at the time of payment or credit, whichever is earlier, we will deduct tax at source. They will deduct tax at source at the rate of 5%. Even over here, up to 15,000, you can pay without deducting tax at source, same points. So here also, at 5% we deduct tax at source. Here also at the time of payment or credit, whichever is earlier, we deduct tax at source. Even over here, up to 15,000, we don't have to deduct any tax at source. Another similar section we have, section 194H. Now see, in section 194H, again I have two people, Mr. Blue and Mr. Green. Mr. Blue is paying some commission to Mr. Green. Now, what commission is this? This is commission which is not covered by section 194D. It is also not covered by 194G. So, all other commission is what will get covered under 194H. Now, who is this Mr. Blue? Same thing like what we saw in 194A and 194C. He may either be an individual or HUF, or he may be any other person. If he is an individual or HUF, preceding previous year turnover should be more than 1 crore, or preceding previous year gross receipt should be more than 50 lakhs. Then this Mr. Blue, if he is paying commission which is more than 15,000, only then he has to deduct tax. If this commission is within 15,000, then no need to deduct tax. This Mr. Blue becomes a deductor. He deducts tax when? Same thing like what we learned under 194D and 194G. He'll deduct tax at the time of payment or credit, whichever is earlier, and he will deduct tax at source at the rate of 5%. This is 194H. So under 194H, a person is making payment of commission, which is commission other than 194D commission, other than 194G commission. If this person happens to be individual or HUF, 194H will apply only if his preceding previous year turnover was more than 1 crore or preceding previous year gross receipt was more than 50 lakhs. All right, then alone he'll have to deduct tax. He'll have to deduct tax at the rate of 5%. If the commission is more than 15,000. If the commission is up to 15,000, he does not have to deduct any tax at source. This is section 194H. Okay, guys. So we've learned totally 11, 12, totally 12 sections we have learned. The first 8 sections I had given you a detailed summary here. All right. In section number 9, after this, we learn section 194C, works contract. How much I can pay without deducting tax at source? Single transaction, 30,000 I can pay without deducting tax at source. Aggregate transactions, I can pay 1 lakh without deducting tax at source. If I'm deducting tax at source, at what rate I will deduct depends upon who the recipient is. If the recipient happens to be individual or a HUF, 1% I will deduct tax at source. If the recipient happens to be any other person, at the rate of 2% I will deduct tax at source. In case the recipient happens to be a truck operator, a goods transporter, a transport operator who's in the business of flying, hiring, leasing goods carriages, and he's giving me his span and he does not have more than 10 goods carriages, then I will deduct tax at I will not deduct tax at source from him. Section 194C will not even apply if the deductee, the recipient happens to be a transport operator fulfilling these conditions. Okay, then we learned 194D insurance commission, 194G lottery commission, 194H other commission. 194D, G, H, all the three at the rate of 5% we deduct. Up to 15,000 no need to deduct, and we deduct at the time of payment or credit, whichever is earlier. Okay guys, so we've learned about 3 more sections, 194D, 194G and 194H. Now listen to my next section, which is again an important section guys. We're going to be learning about section 194DA, very popular section in the examination. Listen very carefully. In 194DA, here what happens is, the person Mr. Blue, he is some life insurance company. Okay, he's some life insurance company. He is making payment to a person who is a resident. Okay, now this payment which he is making to this person, this payment relates to a life insurance policy. Okay, there is a person who is a life insurance company. It is making payment relating to life insurance policy to a person. All right, now this payment can be at the time of maturity, any payment but relating to life insurance policy. Now this Mr. Blue, he becomes a deductor. He will deduct tax at the time of payment, not at the time of credit. He will deduct tax only if this payment is more than 1 crore, which means if this payment is up to 1 crore, then he, not 1 crore guys, sorry, 1 lakh. If this payment is up to 1 lakh, no need to deduct tax at source. Only if the payment is more than 1 lakh, you will deduct tax at source. But he will deduct tax at source at what rate? At 5%. 5% of what? 5% of whatever payment he is making minus all the premiums which Green has paid already. See, in the past for this policy, Green would have paid premiums, right? So all those premiums you will subtract. You will see what is the payment that Mr. Blue is making to Green, and in the past you will see how much premium Green had paid to Blue. So this payment minus this premium, on the net number 5%, Blue will deduct tax at source. Okay, this is extremely important guys. Section 194DA. 194DA will apply when a person, Mr. Blue, he's a life insurance company. He's making payment, any payment relating to life insurance policy to a resident. This payment which he is making is up to 1 lakh, no need to deduct tax at source. But if this payment is more than 1 lakh, he has to deduct tax at source on the difference between this payment and all the premiums which Green has paid in the past. He will deduct tax at source at the rate of 5%. Okay, but there are situations when this 194DA is not applicable. Now, what are those situations? It is not applicable if the payment is going to be exempt. Now, when is this payment exempt? This payment is exempt generally if the policy is taken before 1st April 2012, date of the policy is before not on, just before 1st April 2012, and the premium is, let's say, within 20% of the sum assured. Also, 194DA will not apply if the policy is taken on or after 1st April 2012 and the premium is within 10% of sum assured. It will also not apply if the policy is taken on or after 1st April 2013 and the person on whose life the policy is taken happens to be a handicapped person and the premium is less than or equal to 15% of sum assured. In these cases, Section 194DA will not apply because in these cases, guys, the payment is going to be fully exempt. Okay, guys, in other words, 194DA will actually apply. Then it will apply if the policy is taken before 1st April 2012 and the premium is more than 20% of sum assured. If the policy is taken on or after 1st April 2012 and the premium is more than 10% of sum assured, or if the policy is taken on or after 1st April 2013 and the insured happens to be a handicapped person and the premium is more than 15% of sum assured, only in these cases 194DA will apply. If it is within the limit, then 194DA will not apply. If it is more than the limit, then 194DA will apply. In addition to this, 194DA will also apply if it happens to be a key man insurance policy. 194DA will also apply if it happens to be a ULIP, which is taken on or after 1st February 2021, premium for which is more than 2,50,000 in any year. ULIP which is taken after on or after 1st February 2021, premium of which is more than 2,50,000. All right, in these cases alone 194DA will apply. In these cases, if this payment happens to be up to 1 lakh, still no TDS. This 1 lakh has to be more than this amount has to be more than 1 lakh. In simple words, guys, to conclude, 194DA will apply if two conditions are fulfilled. Condition number 1, your situation has to fall in one of these situations, and condition number 2, the amount should be more than 1 lakh. If it doesn't fall under any of these situations, if the payment is within 1 lakh, then no 194DA. 194DA will apply only and only if your situation falls under one of these cases, that is, policy is taken before 1st April 2012 and the premium is more than 20%, or policy is taken on or after 1st April 2012 and the premium is more than 10% of sum assured, or policy is taken on or after 1st April 2013 on the life of a handicapped person and the premium is more than 15% of sum assured, or if it is a KMIP or if it is a ULIP taken on or after 1st February 2021 and premium is more than 2,50,000. In these cases, if the payment is more than 1 lakh, or in these cases, if the payment is more than 1 lakh, remember, in these cases, if the payment is more than 1 lakh, only then under 194DA, the insurer will deduct tax at the rate of 5% on the payment which he is now making minus all the premiums which you have paid to the deductor in the past. Clear about 194DA, guys? Yes, extremely important section. Then coming to the next section, section 194E. In section 194E, a person is making a payment to another person. And this time, this person happens to be a non-resident. He is either a non-resident sportsman, or he's a non-resident entertainer, or he's a non-resident sports association. This person is making a payment to a non-resident sportsman or to a non-resident entertainer or to a non-resident sports association. This person, this deductor, he will deduct tax at source at the time of payment or credit, whichever is earlier. There is no amount here which you can pay without deducting tax at source. Even a small amount, you'll have to deduct tax at source at the rate of 20%. 20% plus surcharge plus cess. Until now, except section 192, which talks about salary. Except that section, no other section asks you to deduct surcharge and cess also. So surcharge and cess until now applicable only under two sections, section 192 and section 192E. Other sections, you just deduct the tax. You don't deduct surcharge, you don't deduct cess. Here you deduct surcharge, you deduct cess also. Now, what kind of payment is this? See, this non-resident sportsman, he has come to India. If he's a non-resident sportsman, he has come to India and he's played in a game. But this game should obviously not be a card game. It should not be a gambling game. It should not be any betting game and all. He's come to India and he's played a sport. For that, he's getting money. This blue is making payment to green, right? Why is blue making payment to green? If green is a non-resident sportsman, he's come to India, he's played a sport. For that, blue is making a payment to green. Or this non-resident sportsman has come to India and has acted in an advertisement. For example, in IPL season, for example, last season, if you see Dwayne Bravo, we had so many advertisements of Dwayne Bravo. Right? So he's a non-resident sportsman. He's coming to India doing advertisement, and for that advertisement, he's getting payment. The payer will deduct tax at source. Or he's writing some article in some Indian newspaper or in some Indian magazine. For these works, the payment is being made, on this payment 20% tax will be deducted at source plus surcharge plus cess. Or payment is being made to a non-resident entertainer. Imagine some music festival, Taylor Swift, a non-resident entertainer, comes to India and performs. All right, so for that performance we'll have to make payment to her. On that payment we'll have to deduct tax at source at the rate of 20% plus surcharge plus cess. Or some non-resident sports association, for example, if the Australian cricket team is coming to India and is playing a sport in India, is coming to, let us say Australian cricket team is coming to India and is playing a match. For that, BCCI may have to make some payment to Cricket Australia. A person is making a payment to a sports association, Cricket Australia. Cricket Australia is a cricket board of Australia. So on that payment, again, tax will be deducted at source. Any payment we make to a non-resident sportsman, any payment we make to a non-resident entertainer, any payment we make to a non-resident sports association, on that payment we have to deduct tax at 20% plus surcharge plus cess at the time of payment or credit, whichever is earlier. But payment to sportsmen will be covered only if it is relating to a sport other than betting, gambling, card games, or if it is relating to an advertisement, or if it is relating to an article. This is section 194E. Then we have a very simple section, section 194EE. In section 194EE, we have a person who is making a payment to another person. And this payment is relating to National Savings Scheme. Then this person who is making the payment, the deductor, he will deduct tax. Only at the time of payment, he will deduct tax at the rate of 10%. But if this payment happens to be within 2,500, then no need to deduct tax at source. Tax deduction at source will apply only if the payment is more than 2,500. Up to 2,500, no need to deduct tax at source. A simple section. So last few sections, if you see, after the commission sections, 194DA was about payment made under a life insurance policy. 194E is about payments being made to non-resident sportsmen, non-resident entertainer, non-resident sports association. And then we have 194EE relating to payments being made to person under National Savings Scheme. All right, guys, are we clear until here? Yes, the last few sections, 194. See, if you look at the commission sections, before commission section, you are thorough with the sections before that. 194D, G, H, all the three relating to commission. 5% we deduct tax at source only if it is more than 15,000 at the time of payment or credit, whichever is earlier. 194D is relating to insurance commission. 194G is relating to lottery commission. 194H is relating to other commission. 194DA, this is the place where mistakes will happen. Here I am making payment under life insurance policy to any person. On if this payment is within and this payment is more than 1 lakh, I am making payment under life insurance policy to a person, and it is getting covered under these situations. If the policy is taken before 1st April 2012, premium is more than 20%. If the policy is taken on or after 1st April 2012, premium is more than 10%. If the policy is taken on or after 1st April 2013 on the life of a handicap, premium is more than 15%. Or if it's KMIP or ULIP with premium more than 2,50,000. Any of these situations and the payment is more than 1 lakh, then TDS will be attracted on whatever payment blue is making to green. From that, subtracting whatever premium green has already paid to blue. On the difference, 5% tax will be deducted at source. 194E, 20% plus surcharge plus cess, and then 194EE, National Savings Scheme. Now listen to the next section, guys. Next, another important section, section 194I. Under section 194I, we have two people, Mr. Blue and Mr. Green. This Mr. Blue is making payment of rent to Mr. Green. Okay, now who is this Mr. Blue? Same thing like what we learned under 194A, 194C, 194H, same way. Either he can be an individual or a HUF, or he can be any other person. If he's an individual or HUF, preceding previous year, his turnover should be more than 1 crore, or preceding previous year, his gross receipt should be more than 50 lakh. Then this Mr. Blue, he will become a deductor, and when he's making the payment of rent, either at the time of payment or at the time of credit, whichever is earlier, he will deduct tax at source. Now, at what rate will he deduct tax at source? At what rate will he deduct tax at source depends upon this rent is for what. If this rent is for plant and machinery, or if this rent is for land and building or furniture and fixtures. If it is for plant and machinery, he will deduct tax at source at the rate of 2%. If this rent is for land and building, furnitures and fixtures, he will deduct tax at source at the rate of 10%. How much can he pay without deducting tax at source? Up to 2,40,000 total rent, aggregate rent per annum up to 2,40,000, no need to deduct tax at source. Only if it is more than 2,40,000, he will deduct tax at source. This is 194I. I'm making payment of rent on plant and machinery, or rent on land and building, or rent on furniture and fixtures. This rent, if it is more than 2,40,000, then the payer of rent will deduct tax at source at the rate of 2% for plant and machinery, at the rate of 10% for land and building, furniture and fixtures. Okay, if this person happens to be individual or HUF, he will be 194I will apply to him only if preceding previous year turnover is more than 1 crore or gross receipts are more than 50 lakhs. This is about section 194I, a simple section. Then we have section 194IA. Under 194IA, another important section. Again, we have two people in our story, Mr. Blue and Mr. Green. Here, Mr. Green is a seller and Mr. Blue is the buyer. Mr. Green had sold an immovable property to Blue. Immovable property may be land or building, or it may be both. For this, Mr. Blue is making a payment of consideration to Green. If this payment is greater than or equal to 50 lakhs, then the buyer becomes a deductor and he will have to deduct tax at source. He will have to deduct tax at source at the rate of 1%. Now, when will he deduct tax at source? At the time of payment or at the time of credit, whichever is earlier, he will have to deduct tax at source. Okay, so this is so here this Mr. Blue, the buyer, he is making payment for purchase of a property, but then this property should not be agricultural land. It should not be agricultural land. It should also not be a case of compulsory acquisition. This is important. This property should not be agricultural land. This property also should not be a case of compulsory acquisition. Then at the rate of 1%, he will deduct tax at source. But here the payment should be at least 50 lakhs. Even if it is equal to 50 lakhs, he has to deduct tax at source. All the sections until now we said less than or equal to, no need to deduct tax. But here I will say less than 50 lakhs, no need to deduct tax at source. See, section 192A and section 194IA. Only these two sections until now we have seen where we said less than so much, no need to deduct tax at source. 192A says less than 50,000, no need to deduct tax at source. 194IA says less than 50 lakhs, no need to deduct tax at source. All other sections we said less than or equal to, less than or equal to 5,000, less than or equal to 15,000, less than or equal to 10,000. Only these two sections till now we have seen where we said less than 50,000, less than 50 lakhs, no need to deduct tax at source. Okay, here Mr. Blue and Mr. Green, both of them should mandatorily have PAN number. It is mandatory. Here when I say payment, this consideration will also include consideration for car parking, consideration for electricity, consideration for club membership fees. I'm not just talking about payment for the land alone. I'm also going to consider payment for the car parking, along with the house car parking, or along with the house even some club membership fees. Along with the house, I may also charge for some electricity and water fees and all. On all that also 194IA will apply. So in 194IA, when the buyer is making payment for an immovable property other than agricultural land, the buyer will have to deduct tax at source at the rate of 1% if the consideration is greater than or equal to 50 lakhs. Please notice, even though I'm talking about immovable property, here I'm going to look at the consideration. Here the stamp duty value will be irrelevant. See, generally, if you see wherever we talk about immovable property, in all those places, we also talk about stamp duty value, right? But 194IA just talks about the consideration. It does not bother about the stamp duty value. Did you understand? We do not look at the stamp duty value. This was section 194IA. Now coming to the next section, section 194IB. This is again an interesting section relating to rent again. See, we already have section 194I for rent, right? But 194I will apply only if the assessee is paying rent which is relating to his business or profession. Basically, 194I will not apply if you pay rent for your personal purposes. So whenever 194I is not applicable, in that case, you will check for 194IB. Okay, even in 194IB, we have two people, Mr. Blue, Mr. Green. Even over here, Blue is paying rent to Green. Okay, now here there are some specialities. When does 194IB apply? 194IB will apply only, first of all, 194I is not applicable. That is, either if it is for personal purpose, or see, this Mr. Blue over here has to be a person who is an individual or a HUF whose preceding previous year turnover was less than or equal to 1 crore, or gross receipt was less than or equal to 50 lakhs. See, basically, if the turnover was more than 1 crore, or if the gross receipt was more than 50 lakhs, then 194I will apply, right? If it is less than or equal to 1 crore, if it is less than or equal to 150 lakhs, then 194I will not apply. Instead, 194IB will apply. So 194IB applies only when 194I doesn't apply. For example, if the deductor happens to be a person who is an individual or HUF with turnover less than 1 crore or gross receipts less than 50 lakhs, when he's paying rent for personal purposes, in such cases 194I will not apply. Instead, 194IB will apply. Okay, now personal purpose is just one example, but this is the important criteria. The criteria is that his preceding previous year turnover should be up to 1 crore. His gross receipt should be up to 50 lakhs. Okay, and he's paying rent. But here I'm covering only rent relating to land and building. I'm not covering other rent. This rent has to be at least 50,000 per month. This rent has to be more than 50,000 per month. If the rent is less than or equal to 50,000 per month, then no TDS. If the rent is less than or equal to 50,000 per month, then no need to deduct under 194IB. We deduct under 194IB only if it is more than 50,000 per month. And here the TDS rate is 5%. But here TDS will be deducted only at the time of payment or credit of the last month's rent. Only that time TDS will be deducted. I'll explain this to you. But before I explain this to you, let me give you a revision. When does 194IB apply? 194IB applies when the payer of rent happens to be an individual or HUF to whom 194I is not applicable. That is, an individual or HUF whose preceding previous year turnover is up to 1 crore or whose gross receipts of the preceding previous year is up to 50 lakh. So 194I will not apply. So you'll apply 194IB. And 194IB will apply only on rent relating to land or building. It will not apply to other rent. At 5%, we'll have to deduct tax, and 194IB will apply only if the rent is more than 50,000 per month. We will deduct tax at source here only in the last month. Like for example, the last month, like for example, let us say we are making the payment in the from April. From April, we have been paying rent. So in the last month, in the month of March, when we pay rent, only that time we will deduct tax at source. Let us take a situation. Let us say rent is 55,000 per month. So April, you will pay full 55,000. You will not deduct any tax. May, you will pay full 55,000. You will not deduct tax. When will you deduct tax? Only in the last month. Only in the month of March you will deduct tax. In the month of March, you will calculate total how much rent have you paid. 55,000 into 12. Totally calculate and see how much rent have we paid. We have paid totally 6,60,000. Now TDS will be at the rate of 5%. So 6,60,000 into 5% will be 33,000. So 33,000 will be the TDS totally. So in the month of March, from 55,000, we will subtract 33,000 and only balance 22,000 TDS we will pay. You understood what we did? In the month of March, we are calculating what's the total TDS, and the entire TDS in the month of March, only in the last month we will calculate. But what if my tenant is vacating in the middle of the year? Let us say he is vacating in the month of December. In that case, in December, he will calculate total rent. 55,000 into 9 months only. 55,000 into 9 months will be 4,95,000. On this TDS at the rate of 5% will be 24,750. So in the month of December, 55,000 rent he has to pay, right? From that he will subtract 24,750 TDS and only the balance 30,250 he will pay to the landlord. In simple words, the tenant who is going to deduct tax at source, he will deduct tax at source only in the last month, either in the month of March, or if he is vacating in the middle of the year, in the last month in which he is vacating, in that month alone he will deduct tax. But also remember, 194 IB will apply only if the rent is more than 50,000 per month, otherwise it will not apply. Now listen, sometimes when this person does not give his PAN number, then what happens? If the landlord does not give his PAN number, then instead of 5%, we will deduct tax at the rate of 20%, guys. We have this section, right? Section 206AA. 206AA says that in case the recipient, the deductee, if he does not give his PAN number, then we deduct tax at higher rate of 20%. So instead of 5%, 20% you will calculate. So in that case, see how the answer changes. 6,60,000 into 20%, that's going to be 1,32,000. But tell me, in the month of March, I have to pay only 55,000. Is it possible for me to subtract 1,32,000? No, right? That is why 194 IB says that the total TDS will be restricted to the last month's rent. If TDS is 1,32,000, I can't subtract 1,32,000 from 55. So in that case, I will subtract 55,000 itself and no rent I will pay in the month of March. If the TDS exceeds last month's rent, I will restrict the TDS to last month's rent. December example, let us see. Here also, let us say the landlord did not give his PAN, deductee did not give his PAN, so TDS will be at 20%. So 4,95,000 into 20%, 99,000 will be the TDS number. But we have to pay 55,000 rent. From 55,000, is it possible to subtract 99,000 TDS? No, right? When TDS is more than the last month's rent, I will restrict the TDS to the last month's rent, and that month I will pay no rent. If the TDS amount is more than last month's rent, I will restrict the TDS to the last month's rent. I will restrict it to 55,000. So from 55,000 rent, 55,000 TDS deducted, so that last month I will not pay any rent. Entire thing will go as TDS itself. Understood, guys? This is it about section 194 IB. Okay, so two important sections we learned. 194 IA, the buyer is making payment for purchase of any land, building, or both. It's not agricultural land and not compulsorily acquired also. Payment is at least 50 lakhs. The buyer will have to deduct tax at the rate of 1% at the time of payment or credit, whichever is earlier. Then 194 IB, the payer happens to be an individual or HUF whose preceding previous year turnover is within 1 crore, preceding previous year gross receipt is within 50 lakhs. He is making payment of rent for land or building more than 50,000 per month. Then in the last month, he'll have to deduct tax at the rate of 5%. But in case the TDS happens to be more than the last month rent, TDS will be restricted to the last month's rent. Okay, guys, this is it about section 194 IB. Now let me take you to the next section, section 194J, another important section from the examination perspective. Listen, in 194J, again we have two people, Mr. Blue and Mr. Green. Mr. Blue is making a payment to Mr. Green. Now this payment may be payment for professional service, or it may be payment relating to technical service, or it may be payment of royalty, or it may also be payment of non-compete fees, or it may be payment of director's fees. This Green is a resident, and this person, Mr. Blue, same thing like what we learned under 194A, 194C, 194H and 194I. He may either be an individual or a HUF, or he may be any other person. Any other person, fine, but individual or HUF, he will be covered only if preceding previous year turnover is more than 1 crore or preceding previous year gross receipt is more than 50 lakhs. In that case, this Mr. Blue, he will become the deductor at the time of payment or credit, whichever is earlier, he will have to deduct tax. Now, at what rate he will have to deduct tax at source depends upon what is he making the payment for. If he's making the payment for technical services, or if he's making the payment for relating to royalty, if he's making the payment for technical services, or if he's making the payment for royalty relating to movies, relating to cinematographic films, then he will deduct tax at the rate of 2%. All right. In other cases, he will deduct tax at the rate of 10%. But if the payee, the recipient, if the payee happens to be a person who is in the business of call center, then he will deduct tax at the rate of 2% only. How much can he pay without deducting tax? He can pay 30,000 without deducting tax. 30,000 limit we have separately for each. If for professional fees, he can pay 30,000 without deducting tax. Technical fees, he can pay 30,000 without deducting tax. Royalty, he can pay up to 30,000 without deducting tax. Non-compete fees, he can pay without deducting tax, 30,000 rupees. But for director's fees, nothing like that. Even when small amount of director's fees, he will have to deduct tax at source. Okay, at what rate do we deduct tax at source? For professional fees, 10%. Technical fees and royalty relating to cinematographic films, 2%. Everything else, 10%. But if the payee happens to be a person who's just running a call center, for him the rate will always be 2% only. How much can we pay without deducting tax at source? Please remember, we have 30,000 limit separately for each. For professional fees, separate 30,000, technical fees, separate 30,000, royalty separately 30,000, and non-compete fee separately 30,000. But for director's fees, we do not have any such limit. Director's fees, even if it is a small amount, we have to pay, we have to deduct tax at source. Okay, sometimes reimbursements also he may get. Like for example, to the auditor, we may pay reimbursement. Auditor is rendering professional services. We may also give him some reimbursements, like some travel expenses and all. We may give him reimbursement. On reimbursements, we do not deduct any tax at source if the reimbursement is shown separately in the bill. If the reimbursement is shown separately in the bill, then on that, we do not deduct any tax at source. Clear with 194J, guys? Yes, so totally there are 5 sections where we've spoken about this. 5 sections where we've said if individual or HUF, the section will apply only if preceding previous year turnover is more than 1 crore or preceding previous year gross receipt is more than 50 lakhs. What are those 5 transactions? 194A relating to interest other than interest on securities, 194C relating to contract payments, 194H relating to other commission, 194I relating to rent, and 194J relating to technical fees, professional fees and all. Remember, in all these 5 sections, if the deductor happens to be an individual or HUF, then I will cover only those individuals and HUFs. Only if to those individuals and HUFs the section will apply if this individual or HUF's preceding previous year turnover is more than 1 crore or gross receipt is more than 50 lakhs. If this deductor is any other person like firm, company and all, then we will cover them all. If individual or HUF, will cover only if turnover is more than 1 crore or gross receipt is more than 50 lakhs. Also remember, these sections will not apply if the payment is being made for personal purposes. For example, I made payment to a doctor. It's a professional fees, but it's for personal treatment. 194J will not apply. I made payment to a painter to paint my house. Personal payment. I will not apply 194C. So these sections will apply only if the payment is relating to my business or profession. If the payment is for personal purpose, then these sections will just not apply. All right, these sections will apply if the deductor, if he's an individual or HUF, this condition has to be fulfilled. All other persons, automatically it will apply. 5 sections, guys: 194A, C, H, I, J. 194J, I'll give you one small revision once again. Under 194J, the person is making payment of professional fees, technical fees, royalty, non-compete fees or director's fees. Each of the categories you have a limit of 30,000. Up to 30,000, no need to deduct tax. But this limit is not applicable for director's fees, which means even a small amount of director's fees if I pay, tax has to be deducted at source. The rate is generally 10%. But if the payee happens to be a call center, the rate will be 2%. Or if the payment is technical fees or royalty relating to cinematographic films, then the rate will be 2%. And if the reimbursement is shown separately on the invoice, then on that we do not deduct tax at source. This was section 194J. Okay guys, coming to the next section, the 20th section, section 194 LE. But before I begin this section, I want to give you a revision of the last few sections, starting with section 194C. From there, I want to give you a revision. Listen, section 194C applies when I make a payment relating to works contract. Works contract is nothing but advertising, broadcasting, catering, or carriage of goods or passengers by any mode other than railways. Now I can pay 30,000 single transaction without deducting tax at source. I can pay 1 lakh aggregate without deducting tax at source. More than 30,000, more than 1 lakh, we have to deduct tax at source. At what rate we deduct tax at source depends upon who the recipient is. If the recipient happens to be individual or HUF, we deduct tax at 1%. If the recipient happens to be any other person, we deduct tax at the rate of 2%. But if the recipient happens to be a transport operator who does not have more than 10 goods carriages and who has his PAN number also and who's also given declaration, then we don't have to deduct any tax at source at all. Okay, then under, remember 194C, we also learned to differentiate between works contract and sale. If I provide my own material, it is works contract. But if I tell that person, you buy the material, do the work and give me, it is not works contract. Then 194D, G, H, all the three talk about commission. 194D is about insurance commission. 194G is about lottery commission. 194H is other commission. Up to 15,000 they can pay without deducting tax. More than 15,000, 5% they have to deduct tax at time of payment or credit, whichever is earlier. 194DA, when the life insurance company is making payment relating to maturity proceeds, if they are making payment relating to any policy taken before 1st April 2012 with premium more than 20%, or policy on or after 1st April 2012 with premium more than 10%, or policy on or after 1st April 2013 relating to a handicapped with premium more than 15%, or any payment relating to KMIP or ULIP with premium more than 2,50,000, then on these payments, if the payment is more than 1 lakh, then they will deduct tax at source at the rate of 5%. 5% of what? 5% of the payment which is being made, or 5% of the payment which is now being made minus all the premiums which the deductee had paid in advance. One small correction here, guys. Here, if the payment is less than 1 lakh, no need to deduct tax. If the payment is greater than or equal to 1 lakh, then yes, tax has to be deducted at source. Okay, so remember we were making that list. We'll add one more. Section 192A, 194IA and section 194DA. 194DA also says less than 1 lakh, no need to deduct tax at source. Greater than or equal to 1 lakh, you have to deduct tax at source. Okay. Then 194E, I'm making payment to a non-resident sportsman or to a non-resident entertainer or to a non-resident sports association. In that case, I have to deduct tax at source at the rate of 20% plus surcharge plus cess. Surcharge and cess are not applicable to other sections, applicable only to 192 salary and 194E. Then 194EE, I'm making a payment relating to National Savings Scheme. Up to 2,500, no need to deduct tax. More than 2,500, at the time of payment, 10% tax will be deducted at source. 194I is relating to rent on plant and machinery, 2%, rent on land or building, furniture or fixtures, 10%. All right, at the time of payment or credit, whichever is earlier, they will deduct tax. Up to 2,40,000 per annum aggregate rent, no need to deduct tax. Only if it is more than 2,40,000 aggregate, only then we will deduct tax at source. All right, then after this we learned about 194IA. Here we said if the buyer is making payment of consideration for land building other than agricultural land, other than compulsory acquisition cases, if this consideration is 50 lakh or more than 50 lakh, at the rate of 1%, he will deduct tax at source at the time of payment or credit, whichever is earlier. Then here we summarized, generally we say up to 5,000, no need to deduct tax. Up to 10,000, no need to deduct tax. Up to 15,000, no need to deduct tax. But under 194IA, under 194DA and under 192A, these three sections we say less than 50,000, no need to deduct tax. Less than 50 lakhs, no need to deduct tax. Less than 1 lakh, no need to deduct tax. Under 194IA, I also told you here FDV we don't bother about. Then we learned about section 194IB. Here the assessee happens to be an individual or HUF whose preceding previous year turnover was within 1 crore, within 50 lakh gross receipts. So 194I was not applicable to him. See, generally 194IB applies to those assessees, who are salaried assessees. Salaried assessees, they don't even have any turnover, gross receipts and all. They're making payment of rent for personal purposes. Generally, in those cases, 194IB applies. If the rent is up to 50,000 per month, we don't have to deduct tax. Only the rent is more than 50,000 per month, we have to deduct tax, that too in the last month. But here I told you, in case TDS amount is more than the last month rent, I will restrict the TDS to the last month rent. Then 194J, I'm making payment relating to professional fees, technical fees, royalty or non-compete fees or director's fees. Generally, the rate is 10%. But if I'm making payment to a person who's running a call center, then 2%. Or if I'm making payment of technical fees or royalty relating to cinematographic films, then 2%. Then here we also said that for each category, you have a limit of up to 30,000. Up to 30,000, no need to deduct tax, each category separately. But director's fees, no such limit. All right, these are the sections we've learned until now. I've also given you a revision again. I hope until here you are feeling 100% confident. Only if you're confident till here, proceed further. Okay, coming to the next section now, section 194 LE. Here what happens is a person is making payment of consideration to another person. Basically, this person had some land or building. This land or building was compulsorily acquired by Blue. Generally, Blue here is central government or state government, generally. So a person has made compulsory acquisition, and for that compulsory acquisition, he's making payment to a resident. Compulsory acquisition of land or building or both. For this compulsory acquisition, the person, Mr. Blue, becomes a deductor. He'll have to deduct tax at the time of payment. He'll have to deduct tax at the rate of 10%. He'll have to deduct tax at the rate of 10%. The question is, how much can he pay without deducting any tax at source? Here the limit is 2,50,000. Up to 2,50,000, he can make the payment without any tax reduction at source. If it is more than 2,50,000, then yes, he will have to deduct tax at source. So 194 LA, person is making payment to a resident relating to compulsory acquisition of land or building or both. If this consideration happens to be more than 2,50,000, then at the rate of 10%, he will deduct tax at source at the time of payment. Here also SDV and all, we don't bother. We'll just see the consideration. If the consideration is up to 2,50,000, no need to deduct tax at source. If it is more than 2,50,000, then yes, at the rate of 10%, we will deduct tax at source. Okay, then coming to a very important section, also a very recent section, section 194M. Listen carefully. See what does section 194M say. Here again, I have a person, Mr. Blue, who is making a payment to Mr. Green. Now this Mr. Blue, he is making this payment, either he is making this payment for personal purposes, or he happens to be an individual or HUF whose preceding previous year turnover was within 1 crore or gross receipts were within 50 lakhs. Because it was within 1 crore, because it was within 50 lakhs, section 194C, section 194H, section 194J, they were not applicable to him. Okay, so see, 194CHJ applies when turnover is more than 1 crore, gross receipt is more than 50 lakhs. 194M on the other hand will apply if the preceding previous year turnover is within 1 crore, gross receipts are within 50 lakhs. Only then section 194M applies. So 194M, this person is making payment. He's making a payment of either contract relating to works contract, or he's making a payment relating to commission, or he's making a payment relating to professional fees, technical fees and all. But 194C, H, J are not applicable. Either they're not applicable because the payment is for personal purpose, or they're not applicable because assessee's turnover in the preceding previous year is within 1 crore or within 50 lakhs gross receipts. That is why 194C, H, J are not applicable. Hence, instead, what will be applying 194M? One quick revision: under 194M, the person who's making the payment is an individual or HUF whose preceding previous year turnover was within 1 crore, gross receipts were within 50 lakhs. Hence, 194CHJ didn't apply to him. Or he is making a payment for personal purpose, and the aggregate of this payment, aggregate is more than 50 lakhs. If the aggregate is less than or equal to 50 lakhs, then you will not even apply any TDS. Okay, then no TDS. Then no TDS will apply. TDS will apply only if its aggregate is more than 50 lakhs. Okay, then in that case, at the rate of 5%, this deductor is going to deduct tax. What is the rate at the time of 5%? When will he deduct tax? He will deduct tax at the time of payment or at the time of credit, whichever is earlier. So under 194M, the person who's making a payment is an individual or HUF whose preceding previous year turnover was within 1 crore, gross receipts were within 50 lakhs. That's why 194C didn't apply to him. Or he was making a payment for personal purpose. And aggregate of these payments, what payments? Aggregate of the contract payments, aggregate of the commission payments, aggregate of the professional fees, royalty and all put together is more than 50 lakhs. In that case, at the rate of 5%, he will deduct tax at source. Okay, what kind of payments are we talking about? 194C Head J payments we're talking about. We're talking about payments for works contract, payments for commission, payments for professional fees, payments for technical services and all. So these payments are more than, aggregate is more than 50 lakhs, then 5% tax will be deducted at source. This is 194M. Then the next section we have section 194N. This is relating to cash withdrawals. Here I have two people. This person, Mr. Blue, happens to be a bank or happens to be a cooperative bank or happens to be a post office. Okay, now in this bank, there is a person, Mr. Green, who is a customer of this bank. He has an account in this bank and he's a resident. Okay, this Mr. Green, he is withdrawing his own money from this bank. If this withdrawal is more than 1 crore aggregate in a year, then this bank, this deductor, will deduct tax at the rate of 2% of the excess. See, in all the sections we've seen until now, if it is more than 30,000, on the entire transaction we deduct tax. More than 15,000, on the entire total we'll deduct tax. For example, let us say I paid commission 50,000. 50,000 more than 15,000. So on the entire 50,000, I will deduct tax now because it is more than 15,000. I will not deduct just on the excess. All these sections until now, if it exceeds the limit, then we deduct tax on the entire amount. For example, 194I limit is 2,40,000. Let us say total rent I'm paying 3 lakh. I will not deduct tax just on the excess 60,000. No, 3 lakh more than 2,40,000 on entire 3 lakh I will deduct tax. But 194N only special case. 194N I will deduct tax only on the excess. Over and above 1 crore, whatever is the excess, on that excess I will deduct tax at the rate of 2%. That is the beauty of section 194N. You understood 194N, guys? Under 194N, I deduct tax at source on cash withdrawals more than 1 crore aggregate in a year. On the excess above 1 crore at the rate of 2%, it will be deducted. Okay, but then we also have another special provision. The special in that special situation, what happens is that the limit is not 1 crore, the limit is 20 lakhs. If I'm going to withdraw more than 20 lakhs but up to 1 crore, then on that excess, we will deduct tax at the rate of 2%. But if I'm going to withdraw more than 1 crore, then on up to 1 crore, we will deduct at 2%. Excess above 1 crore, we will deduct tax at 5%. For example, if I'm going to, let's say totally, if I'm going to withdraw 30 lakhs, okay, then above 20 lakh, but within 1 crore. So what is the excess above 20 lakh? 10 lakh, right? On 10 lakh, 2% tax will be deducted at source. Okay, but let us say I'm going to withdraw 1 crore 30 lakhs. In that case, what will you do? Up to 1 crore on that 2%. Up to 1 crore means what? Up to 20 lakh, no TDS. 20 lakh to 1 crore on that 80 lakh at 2%. Above 1 crore 30 lakh on that 5%. This is a special situation applicable only in some cases. Here only up to 20 lakh you can withdraw without deducting. More than 20 lakh if you're going to withdraw, but within 1 crore, then on the excess over and above 20 lakh, on the excess 2% tax will be deducted. If I'm going to withdraw even beyond 1 crore, up to 20 lakh no TDS, 20 lakh to 1 crore on that 2% TDS, more than 1 crore on the excess 5% TDS. But when will this special situation apply? This special situation will apply only if your assessee, only when I say assessee, I'm talking about the deductee, the recipient. This special situation will apply only if the recipient has not filed his income tax return in all the 3 preceding previous years. In all 3 preceding previous years, he is not filing his income tax return. Only then section 194N will apply, special situation will apply. See, basically the special situation will apply if you look at preceding previous year 1, preceding previous year 2, preceding previous year 3. In all of them, I did not file the income tax return on time. In all of them, I have not filed income tax return. Only then the special situation will apply. Even in one, if I file the income tax return properly, then this provision will apply. But in all the three, if I don't file my income tax return, then only the special situation will apply. Understood, guys? I'll give you a revision. So under 194N, the banker is giving me my own money. Basically, the customer is going and withdrawing his cash from his account. If he's going to withdraw more than 1 crore, on the excess above 1 crore, 2% tax will be deducted at source by the banker. But in case that customer is a person, all the three preceding previous years did not file income tax return on time. All the three did not file. X in all the three he did not file. See, even in any one, if he files, then normal provision will apply. Special provision will apply only if all the three preceding previous years he does not file. In that case, the up to 20 lakh only you can withdraw without deducting tax. If you're going to withdraw more than 20 lakhs up to 1 crore, on the excess 2% tax will be deducted. If you're going to withdraw more than 1 crore up to 20 lakh, no TDS. 20 lakh to 1 crore, on that difference 2% TDS. Above 1 crore on the excess, 5% TDS will be deducted. This is 194N. Okay, but 194N will not apply. This section will not apply if this customer happens to be the government, or if this customer happens to be a bank, or if this customer happens to be an ATM operator. Okay, then in these cases, section 194N itself will not apply. Giving you a revision of the last few sections, section 194LA applies when the person, when the deductor is making a compulsory acquisition of the deductee's land or building, and the consideration for that is more than 2,50,000. Up to 2,50,000, no need to deduct tax. More than 2,50,000 at the time of payment, 10% he will deduct tax. 194N, the assessee, the deductor is making a payment relating to works, contract or commission or professional fees. But 194C Head J not applicable because either personal purpose or because turnover is less than 1 crore or gross receipts are less than 50 lakhs. In that case, if the aggregate is more than 50 lakhs in a year, then 5% tax will be deducted at source. 194N relating to cash withdrawals, up to 1 crore no need to deduct tax. More than 1 crore on the excess, 2% tax will be deducted at source. But special situation, all the three preceding previous years did not file income tax return on time, then up to 20 lakh no need to deduct tax at source. More than 20 lakh up to 1 crore on the excess, 2% tax will be deducted at source. On the even more than 1 crore, if you're going to withdraw, up to 20 lakh no need to deduct. 20 lakh to 1 crore, 2%. More than 1 crore on the excess, 5%. This is about section 194N. Okay, then after this we have section 194O. Listen to this carefully. This is going to be what? Section number 23, section 194O. Under section 194O, we have an e-commerce operator. I'm having a transaction through an e-commerce operator. The e-commerce operator will deduct tax at source at the rate of 1%. All right. For example, let us say we have Amazon.in, and then let us say we have a seller and we have a customer. So seller lists his products on Amazon.in and Amazon.in sells those products to customers. Right. So the customers will make payment to Amazon.in. Amazon.in will pass on that payment to the seller. From that payment, Amazon.in becomes the deductor. Amazon.in will deduct 1% TDS and will pay only the balance. When will Amazon.in deduct? They will deduct at the time of payment or credit, whichever is earlier, 1% they will deduct. Sometimes what happens is the customer directly pays to the seller. Even on that, Amazon.in is supposed to deduct 1%. Basically, on all transactions on the gross amount. When I say gross amount, I mean on the total amount. On the total amount, Amazon.in will deduct 1%. See, sometimes what happens is, let us say, seller's goods were sold to the customer for 100 rupees. Amazon.in will keep commission of 10 rupees. Balance 90 rupees only will go to the seller. Now here Amazon.in will deduct tax on 90 or on 100. On the gross amount they're supposed to deduct, on this 100 they're supposed to deduct. Yes, they might have deducted some commission, but still on the gross amount they will deduct tax. Even when the customer directly pays to the seller, even on that 194O will apply, even on that Amazon.in will deduct tax at source. What is the tax rate, guys? Tax rate is 1%. Okay, in case the seller happens to be an individual or a HUF who has given his PAN number or has given his Aadhaar number to the e-commerce operator, okay, and the total gross amount is within 5 lakhs. If all these conditions are fulfilled, then section 194O will not apply. Only one exception we have, and that is the deductee. The recipient happens to be an individual or HUF who has given his PAN or Aadhaar to the e-commerce operator, and the total transactions in the year gross amount with that seller is within 5 lakhs. If these three conditions are fulfilled, 194O will not apply, but only for individual or HUF. Okay, so 194O says in case the e-commerce participant, in case the e-commerce operator, through him, if any transactions are done, then on the gross amount he will deduct tax at the rate of 1% at the time of payment or credit, whichever is earlier. Even on the transactions for which the customer is directly making payment to the seller, even on those transactions, the e-commerce operator will deduct tax at source. Tax at source will be at the rate of 1%. Okay, and also remember, guys, in case 194O is applicable, then no other section will apply. For example, here to this transaction 194O is applicable. Now even on this commission, 194H will not apply. Once 194O is applicable on the same transaction, any other TDS section, any other TCS section will not apply. Just one more point under 194O. See, you know about section 206AA, right? 206AA says in case the deductee does not give his PAN, or if he does not give his Aadhaar, out of two, any one also he gives enough. But if neither giving PAN nor is he giving Aadhaar, then 206AA says the TDS rate will be whatever is the rate of that particular section, or 20%, whichever is higher, right? But for the purpose of 194O, it will not be 20%, it will be 5%. Okay, so 206AA generally says in case the deductee, the seller, is not giving his PAN and Aadhaar, then TDS rate will be whatever is the rate applicable in that particular section, or 20%, whichever is higher. But in 194O cases, instead of 20%, you will look at 5%. So in simple words, to simplify, under 194O, the e-commerce operator, he is going to deduct tax at the gross amount at the rate of 1%. He will deduct tax at the time of payment or credit, whichever is earlier. Even on those transactions where the customer is directly paying to the seller, even on those transactions, he will deduct tax at source. If 194O is applicable on that transaction, no other TDS section, no other TCS section will apply. Okay, and then finally we also said that generally the tax rate is 1% here. In case the recipient is not giving his PAN number, then not 20%, the tax rate, TDS rate, will become 5% instead. Okay, that is it about section 194O. So talking about the last few sections that we've discussed, section 194M, here I am making a payment relating to contract work, or relating to commission, or relating to professional fees, technical fees, royalty, director's fees and all. And the person who's making the payment is an individual or HUF whose preceding previous year turnover was within 1 crore, or gross receipts was within 50 lakhs, or he was making a payment for personal purposes, because of which 194CHJ were not applicable. If the aggregate of these transactions is more than 50 lakhs, at the time of payment or credit, whichever is earlier, he will deduct tax at source at the rate of 5%. Under 194N, on cash withdrawals in excess of 1 crore, tax will be deducted at source at the rate of 2% of the excess. But in case the customer, the person who is withdrawing the money, is a person who has not filed his income tax return in all 3 preceding previous years, then more than up to 20 lakh, no need to deduct tax. 20 lakh to 1 crore, 2%. More than 1 crore, 5% of the excess. And then we learned 194O, e-commerce operator will deduct tax at source at the rate of 1% on the gross amount. But if the e-commerce participant, the seller, happens to be an individual or HUF who has given his PAN or Aadhaar number to the e-commerce operator, and gross amount is within 5 lakhs for him, in that case, no need to deduct tax at source under 194O. And then I also told you, if 194O is applicable on that same transaction, no need to deduct tax at source under any other section. This is what we have discussed until now under TDS. Okay, I hope until here you are thorough. Talking about section 194P, a very interesting section introduced very recently by the Finance Act 2021. Section 194P says if my assessee is a specified senior citizen, then a specified bank is supposed to deduct tax. So what is Section 194P about? If we're talking about two people in our story in Section 194P, we talk about a specified bank and we talk about specified senior citizen. Specified bank and specified senior citizen. Under Section 194P, the specified bank will be the deductor and the specified senior citizen is going to be the deductee. Now, what do you mean by specified bank? When I say specified bank, nothing complicated. I am just talking about scheduled banks. All right. But when I talk about specified senior citizens, this is where the complication arises. A specified senior citizen is one who fulfills a list of conditions. We'll go slowly one by one. Condition number 1, he should be an individual. Condition number 2, he must be a resident. Condition number 3, he must be at least 75 years old. See, generally senior citizen is a person who has attained the age of 60, right? But for the purpose of Section 194P, I'm talking about only those persons who have attained the age of 75. They must be 75 years old at any time during the previous year. So condition number 1, he should be an individual. Condition number 2, he should be a resident. And condition number 3, he must be at least 75 years old. See, how is this definition of specified senior citizen different from what we generally understand as senior citizen? Generally, when I say senior citizen, I talk about individual resident who has attained the age of at least 60. Even over here, individual resident, first two conditions are the same, but third condition is different, not 60, here 75. Okay, these two conditions are same. The first two conditions are just like any other senior citizen. See, this is one place where a lot of students actually make a mistake. In their mind, they think senior citizen means 60 years. No, there are 3 conditions. He must be an individual, he must be a resident, and he must be 60 or above. You understand? Please don't forget individual resident. Yes, 60 is the main criteria, but he should also be an individual or resident. So a specified senior citizen is an individual resident who is at least 75 years. Generally, senior citizen is 60 years, but under 194P, my senior citizen is at least 75 years. Okay, condition number 4, he must be earning some pension income. He must be earning some pension income. Condition number 5, does he have any other income? He can have only one other income. He can have interest income. He can have a bank interest income. Bank interest income from any account, maybe a savings bank account, maybe an FD account. He can have any other interest income from a bank account, which may be any bank account like an FD account or a savings bank account. But this account should be in the same bank in which his pension income is credited. For example, let us say we're talking about some random person, Mr. John. Okay, this Mr. John, he is an individual, he's a resident, he's 80 years old, he's earning pension income. Okay, and his pension income is credited to his bank account in Axis Bank, let us say. In the same Axis Bank, he has an FD account also from which he earns interest. This will be allowed. He can have interest income from a bank account, any kind of bank account, but the bank account should be in the same bank in which he is earning pension income. Are you able to grasp this? I'll repeat again. Condition number 5, does my assessee have any other income? He may have bank interest income. See, apart from bank interest income, he cannot have any other income. And I am not saying he should have bank interest income. I am saying he may have, which means, does he have any other income? No other income he should have. At the maximum, he can just have bank interest income. That's how you understand. I'll repeat again. Condition 5, does he have any other income? Preferably, he should not be having any other income apart from pension income. He should not be having any other income. At the maximum, the only other income I will allow will be bank interest income. But even here there are conditions. This bank interest income can be from any kind of bank account, can be from a savings bank account, can be from an FD account, but this bank account should be where? In the same bank where my assessee is also receiving pension income. Fifth condition clear? Yes, so totally 5 conditions. Condition number 1, assessee should be an individual. Condition number 2, assessee should be a resident. Condition number 3, assessee must be at least 75 years old at any time during the previous year. Condition number 4, he must be receiving pension income. Condition number 5, he must not be having any other income. At the maximum, he can have bank interest income from any kind of bank account, but that bank account should be in the same bank in which he is earning in the pension income. Got the 5 conditions? Yes, and lastly, condition number 6, one simple procedural condition only. This specified senior citizen should have submitted a declaration. The specified senior citizen should have submitted a declaration to the specified bank. For this declaration, one format has been given. So this declaration should be in the prescribed format containing all the prescribed details, and it should be verified. Okay, 3 things. This declaration has to be in the prescribed format. Then this declaration has to contain the prescribed particulars, and it should be verified in the prescribed manner. Okay, so all the 6 conditions have to be fulfilled. Then my assessee becomes a specified senior citizen. So specified bank is scheduled bank. Specified senior citizen is an individual resident who is at least 75 years old at any time during the previous year. He is earning pension income, and other income he is not having. At the maximum, he can have bank interest income from any kind of bank account. That bank account should be in the same bank in which he is earning the pension income, and he should have submitted a declaration in the prescribed format containing the prescribed particulars. He should have submitted it to the scheduled bank. Repeat along with me, try to learn with me. You just don't have the time to spend extra few minutes at home learning all this. No, repeat along with me. All these points grasp with me right now in the session itself. The section should get over as the session comes to an end. You should not need even 1 minute of extra effort at home. That is how you should learn. You're understanding? So section 194P, my deductor is a specified bank and my deductee is specified senior citizen. Okay, who is deductor, who is deductee, we've understood, but on what amount is the deductor going to deduct the tax? The question is, on what amount is a deductor going to deduct the tax? Section 194P tells the deductor, listen, Mr. Deductor, you compute what is the total income of the specified senior citizen. See, total income means what? All heads of income after chapter 6A, set off, clubbing, everything is completed. The final calculated total income. On this total income, you find the tax liability. How do you find tax liability, guys? The normal, usual method of calculating tax liability, basic tax. In case there are any, then in case any rebate under 87A is applicable, provide the rebate. In case there is TDS receivable, any other section, TDS has been deducted, you subtract the TDS, you find the net tax liability of the specified senior citizen. This net tax liability of the specified senior citizen, this is the amount of TDS which should be deducted by the deductor under section 194P. We are telling the deductor, listen, if there is a specified senior citizen, for example, Axis Bank, listen, is there any of your customer who is a specified senior citizen? If yes, you see what is your customer's total income. Total income as in after set off, after clubbing, after chapter 6A, final total income number. On the total income number, you find tax liability. See, how do you find tax liability? You see what is basic tax. Then if rebate is applicable, you subtract rebate under 87A. If surcharge is applicable, you will add surcharge. If surcharge is applicable, you also check for marginal relief. Then you add cess, and from this you subtract TDS credit, you subtract TDS receivable. What is TDS credit? What is TDS receivable? For example, the ex-employer who is giving my specified senior citizen pension income, don't you think he would have deducted tax from pension income? Under which section? Pension income would be taxable under the head salaries, right? So the ex-employer, now I was working for a particular employer, I have left the job, I retired, I will be getting pension income. That employer is going to deduct tax while giving me pension income, right? Now that pension income, on that pension income, tax will be deducted by him under section 192. Section 192, guys, TDS on salary. So there I'll be having TDS credit. That TDS credit will be subtracted here. Similarly, I may have FD interest income. If it exceeds the section 194A limits, then the banker may deduct tax against those interest incomes also. Any tax which is already deducted against my incomes, that becomes my TDS credit, TDS receivable. I'm sure you'll be aware of that. Yes, so that you subtract, that's the specified banker has to subtract. The final number, the net number, this is the amount of TDS under section 194P that he must deduct. You understood, guys? See, I'll give you one simple example, okay? I'll give you a numerical example to help you understand this even better, and then we'll work out a study material question on this section. Listen, it's nothing complicated. Listen. Let's say we have this person, Mr. A. Okay, this Mr. A, he was working for the central government. Central government was the employer, he was the employee. This Mr. A has a bank account only in one bank. Let us say he has a bank account in Axis Bank. Now, what kind of bank accounts is he having? He is having a savings bank account. And let us say he is also having an FD account. Okay, long back he had made an FD. Now, Mr. A, he retired from his government job, and now the central government gives him pension income. Okay, this pension income is periodical pension. It is uncommuted pension. See, generally when the government employee earns lump sum pension, commuted pension, it's exempt for him, right? For commuted pension, for government employees is exempt. But uncommuted pension, what is uncommuted pension? Periodical pension, like every month or every year or every 6 months, that is taxable for all employees, whether government employee, whether non-government employee, doesn't matter. You must have learned about this in your salaries chapter. So he's a government employee, but he is receiving uncommuted pension. So definitely exemption he will not enjoy. In the same case, he would have enjoyed exemption had it been commuted pension. He would have enjoyed exemption because for government employees, whether central government employee, whether state government employees, for government employees, commuted pension is exempt. But here uncommuted pension. So central government will deduct tax for him on this uncommuted pension also. Okay, so this Mr. A, he's an employee, he's a retired employee. And let us say he is 80 years old. He is, of course, an individual. He is also a resident. He is receiving pension income. He gets savings bank interest and he gets FD interest. That's all. No other income he is having. And the required declaration and all he is given to Axis Bank. All that he has done. Now he is getting pension income, right? Even this pension income is coming into his Axis Bank account only. Into this savings bank account, into this account only his pension also is credited. Okay, all conditions fulfilled. Let's check whether all conditions fulfilled. Yes, Axis Bank is a scheduled bank. Assessee is an individual. Assessee is a resident. Yes, he is at least 75 years old. He's actually 80 in my example. Yes, he is earning pension income. And yes, he is not having any other income apart from bank interest income. Yes, even his bank accounts are in the same bank only where he's getting pension income, same Axis Bank only. And he has given the required declarations and all to the scheduled bank. All conditions are fulfilled. Now, what will this Axis Bank do? For Axis Bank, Mr. A becomes a specified senior citizen. So Axis Bank will compute Mr. A's total income. In this total income, what and all will Axis Bank consider? Axis Bank will consider this pension income which Mr. A has earned. But guys, this pension income will come under income under the head salaries. Yes, and income under the head salaries, you get section 16 deduction. You get a flat standard deduction here of 50,000. Right? So Axis Bank will compute Mr. A's total income. In Mr. A's total income, there will be only two heads of income. One is salary head of income. The other is IFOS head of income. Under salary head of income, this uncommuted pension will come in. But from this standard deduction, Mr. A will enjoy because salary head of income. Of course, section 16 standard deduction you get. So here you will get one number under the head salaries. Under IFOS, Mr. A will have savings bank interest. He will have even FD interest. Okay. He'll have another number here. No other income he is having. This will become his gross total income. Okay. Now he is 80 years. Okay. So, and he's having SB interest and FD interest, which means section 80 TTB deduction he will get under chapter 6A. So bank will subtract that also. 80 TTB deduction you will get for savings bank interest as well as for FD interest, right? And what is the maximum 80 TTB deduction you get? Maximum you get 50,000 rupees, right? So what is Axis Bank doing? Axis Bank is computing Mr. A's total income and tax liability. In total income calculation, Axis Bank considered his salary head and IFOS head. Only these two heads, no other heads Mr. A will have, right? In salaries head, Axis Bank will give standard deduction also from the pension income. Total gross total income you will get from this chapter 6A will be allowed. Savings bank and FD interest is allowed as a deduction under 80 TTB for senior citizens. Had my assessee not been a senior citizen, then 80 TTA, right? 80 TTB is only for individuals, residents who are at least 60 years old. Maximum 50,000 deduction the bank will provide. So the final number, this is going to be the total income of the assessee. Okay. On this total income, Axis Bank will calculate the tax liability of Mr. A. All right. Tax liability will be calculated, rebate will be subtracted, surcharge will be added, marginal relief will be provided, cess will be calculated. In case Axis Bank has already deducted tax under 194A for these two interests, even that will be deducted. In case central government has deducted tax under section 192 on uncommuted pension, even that will be deducted. The balance tax amount which Mr. A is liable to pay, that much amount Axis Bank will now deduct under 194P. Last part I'll repeat again. What will Axis Bank do? On this total income number, Axis Bank will calculate the tax liability of Mr. A. In calculating this tax liability, all the benefits like rebate will be considered. All the additions like surcharge and cess will be considered. Also, the employer, while giving pension, would have deducted tax under section 192. Even that will be deducted. Even the banker, while giving interest, FD interest, even the banker might have deducted section 194A interest of section 194A TDS, even that will be deducted. Okay, the final net number, the final tax liability, the final net tax which Mr. A has to now pay, that is the amount which Axis Bank, the specified bank, will deduct as tax under section 194P. Now you understood? Very simple. Section 194P, I have two people. I have the scheduled bank on one side and I have a specified senior citizen on the other side. Come on, tell me the conditions. Who is a specified senior citizen? He's an individual resident who is at least 75 years old at any time in the previous year. He is receiving pension income. He is having no other income. Maximum he can have bank account, bank interest income. This bank interest income is from which bank account? Can be any kind of bank account, can be a savings account, can be an FD interest account. But where is this bank account? In the same bank where even pension income he is receiving. All right. And also, the specified senior citizen should have given the prescribed declaration in the prescribed form to the government, to the banker. Okay, if all these conditions are fulfilled, the banker will calculate Mr. A's total income. The banker will calculate Mr. A's net tax liability after providing 87A rebate, after considering surcharge, after providing marginal relief, also after considering TDS credit, TDS receivable. The net amount of tax which Mr. A is liable to pay, that much amount the scheduled bank will deduct under section 194P. Now are we clear? Now I'm sure you will be having better clarity. Right? Now listen, one last point under section 194P, and then I will discuss one of the study material questions with you all. Listen, in case tax is deducted under section 194P, if this section is applicable and if the specified bank has accordingly deducted tax under section 194P, then this specified senior citizen, he has a big, huge benefit. He does not have to file return of income for that year. He can escape filing return of income for that year. It is not required. The relaxation of return of income is given to him. What is the point, guys? In case the specified bank deducts tax under section 194P for the assessee, then the specified senior citizen does not have to file return of income for that particular year. Got it? This is it about the concept regarding 194P. Now let us work out a question from your study material regarding section 194P. Okay, let me bring the question to your screen. Give me a moment, please. Look at this. Let's read the question. Let's see what it says. It says, Mr. Sharma, a resident Indian aged 77 years, gets pension of 52,000 per month from the UP state government. The same is credited to his savings account in SBI Lucknow branch. So he is a resident, he is Indian, he is aged 77 years, he is at least 75 years. He is getting pension income, 52,000 per month he is getting from the UP state government. And this pension income he is getting into his savings account in SBI, in Lucknow branch SBI. In addition, he is also getting interest 8% on FD of 20 lakhs with the said bank. Out of the deposit of 20 lakhs, 2 lakh represents 5-year term deposit made by him on 1st April 2021. Interest on savings bank credited to his SBI savings account for previous year 21-22 is 9,500. From the above facts, compute total income and tax liability of Mr. Sharma for assessment year 22-23, assuming he has not opted for 115 BAC. First subdivision, if you see, they're asking us to simply calculate his total income, his tax liability, without even bothering about 194P and all. His normal, usual calculation we have to do. The assessment year in question is assessment year 22-23. So, answer to subdivision A or 1. Answer to subdivision 1. Computation of total income. Computation of total income of Mr. Sharma for assessment year 22-23, nothing but we're talking about previous year 21-22. Okay, now what are his incomes? If we read from the very beginning, he is first of all getting pension income. He is getting pension income 52,000 per month, which means this is uncommuted pension. Yes, he is getting pension income from state government. It is uncommuted pension. It will be taxable. Had it been commuted pension, then you would have said government employee exempt. But this is uncommuted pension, hence it will be taxable for him. Under which head? Under the head under the head salaries. Right? So under the head salaries, my assessee, Mr. Sharma, has uncommuted pension income. It says 52,000 per month. So 52,000 into 12, this will work out to 6,24,000. Then assessee under salaries head, he also gets section 16 deductions. Under section 16 deduction, standard deduction, flat 50,000 my assessee will enjoy. So the net number is going to be under salaries 5,74,000. In addition to this, my assessee also has income from other sources. If you see, my assessee is having interest income, 8% interest income on FD, 20 lakhs. Out of this 20 lakhs, 2 lakhs is FD, 5-year FD made by him on 1st April 2021. In other words, total 20 lakhs FD he has. Out of this 20 lakhs, 18 lakhs he was having earlier itself. 2 lakhs is new FD which he made on 1st April 2021. So 18 lakhs was already existing on 1st April 2021. 2 lakhs was made on 1st April 2021. So on the entire 20 lakhs, all 12 months interest assessee will enjoy. Right? Why all 12 months? Because 18 lakhs was anyways existing on 1st April and 2 lakhs, the new FD also is made on 1st April itself. So on this entire 20 lakhs, 8% interest he is going to get. So under IFOS, FD interest on this entire 20 lakhs, he is going to get 8% for all 12 months for the entire year. This is going to be how much? This is going to be 1,60,000. In addition to the FD interest, the question also says that he gets a savings bank interest. Interest on savings bank credited to his SBI savings account is 9,500. So 9,500 is his savings bank interest. So his total IFOS is 1,69,500. Hence, the assessee's gross total income, if you see, that's going to be 7,43,500. Okay, they're asking us to calculate total income and tax liability. So total income is 7,43,500. Now, no wait, this is not total income. This is just the gross total income. Won't my assessee also enjoy Chapter 6A deductions? Right? Now, what are the Chapter 6A deductions that my assessee is going to enjoy? Let us go line by line and let us see. The question says that out of 20 lakhs, 2 lakhs FD he has made in the current year, and it is a 5-year FD. See, term deposit, time deposit, FD, they all mean the same thing. Okay. If my assessee makes any time deposit or any FD or any term deposit in his own name, if it is a 5-year term deposit, then he gets deduction under ATC. So this 2 lakhs which he's making in the current year, a 5-year FD in his own name, this 2 lakhs he will get as a deduction under section ATC. But we also know that under section ATC, what is the maximum deduction you can get? Just a moment. Yeah. So under ATC, what is the maximum deduction you get? You get only 1,50,000. So actually it was 2 lakh which my assessee has made in 5-year FD, but that 2 lakh I will restrict. I will restrict to the maximum allowed, which is only 1,50,000. In addition to this, any other Chapter 6A deduction that you can think of? See, my assessee is resident Indian and at least 60 years old. He is earning FD interest, he is earning savings bank interest. So can't we give our assessee section 80TTB benefit also? Yes, 80TTB benefit will be for FD interest and SB interest. Why 80TTB? Why not 80TTA? 80TTB applies to resident individuals who are 60 and above. Those conditions are fulfilled. So I'll give my assessee 80TTB benefit, total 1,69,500, but we will restrict it to 50,000. Right? Under 80TTB, the maximum deduction you get is 50,000. So total Chapter 6A deduction I have is 2 lakhs. So now if you see the total income of my assessee, it's going to be 5,43,500. This is the total income of our assessee. Okay. Now going to the second part, they're also asking us to calculate the tax liability of our assessee. Okay, now his total income we just calculated is 5,43,500. If you look at the assessee's age, he is a resident Indian who is 77 years old. He is at least 60 years, but he is below 80 years. which means he's a senior citizen and his basic exemption limit will be what? 3 lakh. Generally, basic exemption limit is 2,50,000, but because he's a senior citizen, his basic exemption limit will be 3 lakhs. So, what is his basic tax calculation now? His total income is 5,43,500. So, his basic tax calculation is going to be 10,000 plus 20% of 5,43,500 minus 5 lakh. Your normal usual slab rate calculation, guys. Up to 3 lakh, no tax. 3 lakh to 5 lakhs. On that 2 lakhs, 5% tax, which will be 10,000. Then above 5 lakh, up to 10 lakh, 20% tax. You know this. So 10,000 plus 20% of excess above 5 lakhs. Now calculate and tell me what is your basic tax liability. Your basic tax liability will work out to 18,700, guys. Yes, now assessee will not get 87A rebate because total income is more than 5 lakhs. 87A rebate you get only if total income is within 5 lakhs, right? So no rebate under 87A. No surcharge also because total income is not more than 50 lakhs. So straight away you will add cess at 4%. Cess at 4% will be 748. So the total tax liability of our assessee will be 19,448, which of course we will round off to 19,450. Okay, this is it about the first subdivision. What is a total income and what is a tax liability? Here, if you see, we did not apply 194P and all. Normal, usual calculation is what we have done here. Basic tax 18,700. No rebate because my assessee's total income is more than 5 lakhs. No surcharge because assessee's total income is within 50 lakhs. And says, as always, we will add. Total was 19,448, which we rounded off to 19,450. Now let us go to the second subdivision. What would be the amount of tax deductible at source by SBI, assuming the same is a specified bank? Is Mr. Sharma required to file his return of income? So basically, they're asking us two questions within the second sub-question. Let us see them one by one. First of all, they're asking us, what would be the amount of tax deductible at source by SBI, assuming it is a specified bank? They're obviously asking us about section 194P. Now, if section 194P has to be fulfilled, some conditions have to be fulfilled. If section 194P has to apply, 6 conditions have to be fulfilled. Now, what are the conditions? Let us see one by one. Condition number 1, he must be a resident. Yes, my assessee is a resident. Condition number 2, he must be an individual. Yes, Mr. Sharma, individual. Condition number 3, he must be at least 75 years old. Yes, he is 77, he is at least 75 years old. Condition number 4, he must be having pension income. Yes, he is getting pension income from UP state government. Condition number 5, he must not be having any other income. Maximum he can have bank interest income, but this bank interest should be from bank account in the same bank where he is getting pension. Let us see if this condition is fulfilled. Now see, pension income he is getting into which account? The pension income is credited to his savings account in SBI Lucknow branch. Now, where is he having FD interest income? Where is he having SB interest income? His FD interest, his savings bank interest, they are all from his SBI account only. They say he has FD also with the said bank. So his FD also is with the same SBI bank. His savings bank account is his savings account also is in the same SBI. So yes, he is having any other income. Yes, that any other income is none other than bank interest income. But even this bank interest income, FD interest and savings interest are from the same SBI account, right? So even condition 5 is fulfilled. Condition 6, what is condition 6? That he must have given a declaration. Let us say that condition is fulfilled. So all the conditions are fulfilled, which means Mr. Sharma is a specified senior citizen, guys. And very clearly they have given, assuming that the bank is a specified bank. So if the banker is a specified bank and if the customer is a specified senior citizen, then the specified bank has to deduct tax under section 194P. So does SBI have to deduct tax under 194P? Yes. SBI will compute the normal usual total income of Mr. Sharma. On that, SBI will calculate his tax liability. From this 19,450, in case any tax has been already deducted under section 192, that will be deducted. In case any tax has already been deducted under section 194A by the banker, even that will be deducted. On the FD interest, banker would have deducted 194A tax, even that will be deducted. This balance amount which you get, this is the amount which under section 194P SBI will be deducting now. Okay, so the question was, what would be the amount of tax deductible at source? We can't give the exact amount because we don't know how much tax was deducted at source under 192, under 194A, whether tax was deducted, whether tax was not deducted, we don't know. So we can't give the final number. We will just say, yes, tax will be deducted under section 194P by SBI. Why? Because all these conditions are fulfilled, number one. And what is the amount? From this 19,448, from the tax liability, we will subtract the TDS credit. That is, we will subtract tax which is already deducted from the pension income under section 192. We will subtract tax which is already deducted by the banker under section 194A from FD interest. See, savings bank interest, 194A will not be applicable. Okay, 194A on bank interest, if you see 194A, if you see bank interest, on FD interest it is applicable. On recurring deposit interest it is applicable. But on savings bank interest, it is not applicable. It's only on FD interest and RD interest. So if it exceeds the limit, the banker would have deducted tax there also. So we'll consider the tax which is already deducted under 192, 194A. The balance tax liability SBI will now deduct under section 194P. Okay, then they are asking, is Mr. Sharma required to file his return of income for 22-23 if tax deductible at source has been fully deducted? Here the answer will be no. Remember, I told you under section 194P, if tax is deducted, then assessee does not have to file his return of income. So if tax is fully deducted under section 194P, then no, Mr. Sharma does not have to file his income tax return for that year. And then coming to the last part, the last third question, would your answer to question 2 be different if FD was with Canara Bank? See, if FD was with Canara Bank, what would happen? In my third scenario, if the FD was with Canara Bank, then I will say that Mr. Sharma, he would not even be a super senior citizen anymore. Do you agree with me? Mr. Sharma would of course not be a super senior citizen anymore, because to be a super senior citizen, 6 conditions have to be fulfilled. And one of the conditions is, in case you are having bank interest income, that bank interest should be from a bank account in the same bank where you're getting pension. Assessee is getting pension in SBI and assessee is going to get FD interest from Canara Bank. Which means, don't you think this condition is getting fulfilled? This condition is getting violated. Yes, because he's getting bank interest income from a bank account which is other than the bank where he has pension income. He is getting pension income from SBI. He is getting FD interest from Canada, 2 different banks. Hence, this condition is violated. Very beginning, when I was discussing 194P, that time itself we discussed, if he is having any other income, maximum he can have only bank interest income. That bank interest income can be from any kind of account, but that account should be in the same bank where he is receiving pension. Here this condition is not fulfilled. Hence 194P will not apply. Mr. Sharma will not be a super senior citizen, will not be a specified senior citizen, and 194P will not apply. All right. So the third question was, would your answer to question number 2 be different if FD of 20 lakh was with Canara Bank instead of SBI? Yes, in that case, section 194P would not be applicable. Total income will stay the same. Tax liability would still stay the same. Even in the third scenario, the UP state government would have deducted tax at source under section 192 from pension. Canara Bank will deduct tax at source under section 194A on the FD interest, but section 194P will not apply. All right, are we all thorough with 194P, guys? Yes, so 194P, remember the conditions, remember the keywords: specified bank and specified senior citizen. Specified senior citizen is an individual resident 75 years and above, and he should be receiving pension income, should not be having any other income apart from bank interest income. The bank interest income can be from any kind of bank account, but the bank account should be in the same bank from in which the assessee is receiving pension income. And lastly, the specified declaration in the prescribed format, the specified senior citizen should have filed with the specified bank. This is it about section 194P. In the next part of our discussion, we'll be learning about two connected sections. See, listen, in Finance Act 2020, the government brought out a new section, section 206C1H. Basically, it was connected with TCS. Something very, very similar in Finance Act 2021, the government brought out a section, section 194Q. This is relating to TDS. Now, these two sections, their motive is the same. The transactions more or less are the same, but you need to clearly know how to differentiate between both. And that is why, even though you already know what is section 206C1H, I think I'll still give you one small revision on this. We will end up spending some 5 minutes, but I think it will be worth it. So let us discuss about section 206C1H. Now, what does this section say? This section says I have two people. Let us say we have the buyer and we have the seller. The seller has sold goods to the buyer, and the buyer is going to pay consideration for the goods to the seller. Section 206C1H puts responsibility on the seller that you collect tax. Seller, you collect not only consideration from the buyer, not only collect consideration for the goods, you also collect TCS from the buyer. So section 206C1H puts responsibility on the seller that when the seller is collecting consideration for the goods from the buyer, along with the consideration, the seller will also collect tax at source. This TCS will be at the rate of 0.1%, a very small amount, 0.1%. But in case any other TCS section is applicable, or if any other TDS section is applicable, or if it happens to be exports, then in those cases, the section set 206C1H will not apply. Okay, so when 206C1H will not apply, if it is if any other TCS section is applicable, or any other TDS section is applicable on that transaction, or if it is export, then TCS will not apply under 206C1H. Okay, a very special point about 206C1H was that this section will apply only if the sale consideration, only if the total, the aggregate sale consideration is more than 50 lakhs. We will look at the aggregate consideration. What is the total amount of consideration that the buyer has to pay throughout the year for the goods purchased? In simple words, we will see what's the total value of the goods purchased. This aggregate should be more than 50 lakhs. Okay, only then TCS under 206C1H was applicable. And that too, this TCS at 0.1% will be collected only on the excess. For example, if the seller has sold goods to the buyer for 55 lakhs, let us say, 55 lakhs is more than 50 lakhs. So on the excess 5 lakhs, 0.1%, buyer will have to pay TCS to the seller. This is what you would have learned. Another special point about 206C1H was that, see, generally what happens if the GST component is shown separately in the invoice, then on the GST component, generally we don't deduct tax, right? But in section 206C1H, even on the GST component, even on that 206C1H will apply. Even on the GST component, the tax has to be collected. So we will consider even the GST component. When you see the aggregate, you will consider even the GST component, even if it is shown separately in the invoice. All right, so this is what section 206C1H said. One more extra point was that the section will apply only if the seller is a person whose turnover in the preceding previous year turnover, if you see, it should be more than 10 crore rupees. Okay, this is what 206C1H said. I'll give you one quick revision of 206C1H. Listen. 206C1H applies when the seller is selling goods to the buyer in such a way that the aggregate amount of consideration which the buyer owes on these goods is more than 50 lakhs. Then on the amount in excess of 50 lakhs, the seller will collect from the buyer not only the consideration, seller will also collect tax at the rate of 0.1% on the excess. Now, when should this TCS be paid? What is the time of payment of TCS? When should the seller collect the TCS? At the time of receipt. Basically, when the seller is collecting the consideration from the buyer, at that time, along with consideration, seller will also collect TCS. So the time of receipt of consideration, seller will collect tax at the rate of 0.1% only on the excess. If the total sale of goods, if the total amount of sale of goods is more than 50 lakhs, on the excess over and above 50 lakhs, on the excess alone, 0.1% tax is collected at source. Then we said in case any other TCS section is applicable, in case any other TDS section is applicable, or if this transaction is export of goods, then on all those cases, 206C1H will not apply. Then we said the seller should be one whose turnover in the preceding previous year is more than 10 crores. And finally, we said in case GST separately indicated on the invoice, even then 206C1H will apply even on the GST portion. One last point under 206C1H, there is a connected section, section 206CC. Listen to what section 206CC says. Sometimes what happens is that PAN may not be available. The buyer may not furnish his PAN. If the buyer does not give his PAN, in that case, we tell the seller to collect tax at a higher rate. Buyer is supposed to give his PAN number to the seller. But for some reason, if the buyer is not furnishing his PAN number to the seller, we tell the seller to collect tax at source, to collect TCS at higher rate. So generally, in such cases, 206CC says you compare two things. You compare two rates. Number one, you see 2 times of the applicable rate. Okay, and you compare that with 5%. These two numbers, you pick whichever is higher, that much tax seller has to collect. So when does 206CC apply? 206CC applies when the buyer is not able to give his PAN. In that case, TCS rate will change. TCS rate will be 2 times of whatever rate is applicable, or 5%, whichever is higher. But this will apply in all other TCS cases. In case section 206C1H TCS is applicable, and if the buyer is not able to give his PAN number, in that case the TCS rate will be same thing, guys, 2 times of the applicable rate, that is 2 times of 0.1%, but instead of 5%, we will compare it with 1%. This is the only thing that will change. Okay, so here I've given you once again a revision of 206C1H and also a connected section 206CC we have learned. Okay, to give you an even better understanding, or to give you an even solid, confidence on this section, I'll quickly put down the points. Under section 206C1H, what are the criteria, guys? We'll go one by one, we'll go point by point. first of all, we had said that who should my seller be? My seller should be a person whose preceding previous year turnover is more than 10 crore. This I'll put as condition 1. Then what is condition 2? The aggregate consideration which is payable during the year, the aggregate amount of sale which happened during the year. Instead of saying aggregate consideration, instead of that, I'll say the aggregate value of goods sold. Basically, what is the consideration due for all the goods which are sold during the year by that seller to that particular buyer? Aggregate value of goods sold should be more than 50 lakhs. Even equal to 50 lakhs, we will not consider. I'm talking about more than 50 lakhs. In this aggregate value, you will include even the GST component, I told you. Then condition number 3, any other TCS section should not be applicable. Any other TDS section should not be applicable. Also, it should not be exports. Okay. Anything else we've missed? We said seller should be a person whose preceding previous year turnover more than 10 crore. Total consideration due on the goods which are sold during the year. Total sale value of goods should be more than 50 lakhs. Then we said, when will the seller collect TCS? He will collect TCS at the time of receipt of consideration. Then what was the TCS rate? I told you the TCS rate we said will be 0.1%. But section 206CC also will apply. When does 206CC apply? 206CC applies when buyer does not give PAN. When buyer does not give PAN, for all other TCS sections, the rate will be 2 times. The rate will be 2 times of the applicable rate or 5%, whichever is higher. But in case it happens to be section 206C 1H TCS, here the rate will be same thing. What is this? When I say same thing, I mean 2 times of the applicable rate, but instead of 5%, we will compare it with 1%. Right? Anything else that we've missed from here? I think everything else we've put down, even the GST component, preceding previous year turnover more than 10 crores, will collect tax at the time of receipt. See, who will collect tax? 206C 1H is putting responsibility on whom? TCS is collected by whom? By the seller. We are putting responsibility on the seller. Then we also spoke about this, none other TCS section should apply, no other TDS section should apply. It should not be export. TCS will be 0.1%. 0.1% of what? 0.1% of excess. Excess as in over and above 50 lakhs. On the excess, 0.1% will be collected at source. This is 206C 1H. I am very sure with this revision, you are now thorough about 206C 1H. Now, this 206C 1H was introduced by Finance Act 2020. The very next year, in Finance Act 2021, Section 194Q was introduced. This Section 194Q puts responsibility on the other party, puts responsibility on the buyer. Section 194Q puts responsibility on the buyer. It asks the buyer to deduct tax at source. Now, let us see what exactly happens in 194Q. Even here, I have 2 people in my story. We have the buyer and the seller. The seller is selling goods to the buyer and buyer is going to pay consideration to the seller. Section 194Q tells a buyer, buyer, you please deduct tax. You deduct tax at the time of payment of consideration or at the time of credit, whichever is earlier. Tax has to be deducted at the time of payment or credit, whichever is earlier. This section also has a lot of conditions. Here, the buyer should be a person whose preceding previous year turnover was more than 10 crores. Okay. Condition number 2, the seller over here should be a resident seller. So, point number 1, 194Q is putting responsibility on the buyer that when you're paying consideration or the time of credit of consideration, whichever is earlier, deduct tax. But this section will apply only if for the buyer, preceding previous year's turnover was more than 10 crore, seller should be a resident. Now, even over here, this section will apply only if the aggregate value of the goods, the aggregate value for the entire year should be more than 50 lakhs. Even over here, tax will be deducted at the rate of 0.1% only on the excess. Same example I'll give you. Even over here, if the total amount of goods being purchased, sold here was more 55 lakhs, let's say, then on the excess 5 lakh alone, 0.1% tax will be deducted at source by the buyer. So even over here, the tax rate is 0.1% on the excess. Then some more points under this section. Section 194Q will apply only if no other TDS section is applicable. For example, if section 194O and section 194Q both are applicable, you will apply 194O only. I'm very sure you will be able to recall 194O. Remember that section where I tell the e-commerce operator to deduct tax at source. So if any other TDS section is applicable on my transaction, then you will apply that other TDS section. You will not apply 194Q. So any other TDS section is applicable, you apply that. In case any other TCS section is applicable, you see which TCS section is applicable. You see, is it section 206C1H? If on the same transaction, section 206C1H and section 194Q both are applicable, then you'll always give priority to section 194Q. But if any other TCS section apart from 206C1H is applicable and section 194Q both are applicable, then you will apply only that other TCS section. All right, then this section is also not applicable for all those transactions where purchase or sale happened through a stock exchange. If the purchase or sale of goods, for example, shares, if they were purchased or sold through stock exchange, then you will not apply section 194Q. Then, in case the current previous year happens to be the first year after incorporation, if the current year is the first year of my assessee's business, then section 194Q will not apply. Why? Because 194Q applies only if buyer's turnover in the preceding previous year is more than 10 crore. But if the current year is the first year for the buyer's business, then we don't have preceding previous year. If we don't have preceding previous year, we will not be able to check the 10 crore condition, isn't it? Hence, if this is the first year, then section 194Q we will not apply at all. All right, you're able to grasp all these points. So if any other TDS section is applicable, you apply that, not 194Q. In case any other TCS section is applicable, you see which one is it. If it is 206C1H, then you apply 194Q. But if any other TCS section is applicable, you apply that TCS section and not section 194Q. All right, guys. This point is clear, right? This is important. Now let me take you forward. See, what about the GST amount? In case GST is indicated separately, then into 194Q, you will not deduct tax on the GST amount if it is shown separately in the invoice. This is total opposite of what I told you under 206C1H. 206C1H, I told you, even if the GST amount is shown separately, you will still consider it. You will still include it. But here, if the GST amount is shown separately on the invoice, you will not consider the GST amount. Okay. In case the buyer is making an advance payment to the seller, sometimes the buyer may pay consideration in advance, right? Even on advance payments, section 194Q will apply. Why? Because 194Q has to be deducted at the time of payment or credit, whichever is earlier. So when you pay advance, you're making the payment in advance. You're making the payment first. The payment is earlier. So you have to deduct tax under section 194Q at the time of payment or credit, whichever is earlier. Then talking about the next point, I just told you that the rate is going to be 0.1%. But guys, even over here, something very similar to what we discussed under 2061H, we can discuss even over here. Remember there we said, what if the buyer does not give PAN? Then we said 206CC will apply. Even over here, we have a similar section. Here we have section 206AA. Section 206AA says, if the seller does not give PAN. Here, seller is supposed to give PAN, right? When we deduct tax at source, the deductee is supposed to give PAN. If the seller does not furnish PAN, if it is any other TDS section, then the TDS rate will be the applicable TDS rate, whatever it is, or 20%, whichever is higher. But in case it is section 194Q and the seller is not giving his PAN number, if he's not furnishing his PAN number, then the TDS rate will be same. You see what is a TDS rate, which is 0.1% or 5%, whichever is higher. You got it, guys? So just like how we have section 206CC in TCS, similarly we have section 206AA in TDS. If the seller does not furnish his PAN, all other TDS sections, the applicable TDS rate will be whatever is the TDS rate or 20%, whichever is higher. But in if section 194Q is applicable and the seller is not giving his PAN number, then the TDS rate will be whatever is the applicable TDS rate for 194Q, that is 0.1% or 5%, whichever is lower. This is it about section 194Q, the major part. Till here, I'll give you one quick revision. Then there is one more point about 206, about 194Q, which I will discuss with you. Then I will put down in writing, just like how I gave you the list for 206C1H. Similarly, we'll put down for 194Q also, and then I'll work out a question for you. That's a plan of action. All right, let us have a quick revision first. 194Q puts responsibility on the buyer. Mr. Buyer, if you're going to buy goods from a seller, and if the aggregate value of the goods which you're purchasing from the seller is more than 50 lakhs in a year, then on the excess, over and above 50 lakhs, on the excess, you have to deduct tax at the rate of 0.1% at the time of payment or at the time of credit, whichever is earlier. But this section will apply only if the buyer's preceding previous year turnover was more than 10 crore rupees. Seller has to be resident. Then we said, even on the in case GST component is shown separately in the invoice, then on the GST component, this section will not apply. Okay, advance payments also this section will apply because this section applies at the time of payment or credit, whichever is earlier. So if I pay advance, payment is happening earlier. Hence, this section will get attracted. Then we learned section 194Q will not apply if any other TDS section is applicable. For example, if 194O and 194Q both get attracted to my same scenario, then 194O I will apply. Similarly, if any other TCS section is applicable, you see which one is it. If it is 206C1H, then 194Q will get priority. If it is any other TCS section, then that other TCS section will get priority. Then we learned if the transaction is happening through stock exchanges, then this section itself will not apply. And also we learned, in case the current year is the first year of my assessee's business, first year of my buyer's business, then preceding previous year we don't have. If we don't have preceding previous year, then the criteria that preceding previous year turnover should be more than 10 crore. Can't fulfill that. So this is the first year of my buyer's business, then I will not apply 194Q on him. Finally, we learned 194Q rate is 0.1%. But in case the seller is not giving his PAN number, then the TDS rate will be 0.1% or 5%, whichever is higher. Obviously, 5% will be higher. Okay, till here you understood, right? Now let me take you forward. There is one more concept which we have to learn under section 194Q. Now, section 194Q was actually applicable only from 1st July 2021. So what I'm going to be discussing with you here is a special provision, a special concept which is applicable just to previous year 21-22. Why? Because this was the first year of this section's applicability. So the section was applicable only 1st July 2021 onwards, which indicates that you will deduct tax only if payment or credit, whichever is earlier, should be on or after 1st July 2021. Only then you will deduct tax under 194Q. But then when you consider the aggregate limit of 50 lakhs, for that you will consider the entire year. You will consider even before 1st July. I am sure you wouldn't have understood. Listen, I'll explain to you again. Two things I'm talking to you about: the date of deduction and the aggregate sale. See, we said, right, aggregate sale should be more than 50 lakhs. Only then you apply 194Q. For this aggregate sale, you will consider all the transactions. You will consider before 1st July 2021 also. You will consider after 1st July 2021 also. You will consider both. Okay. Now, when do you deduct tax? You deduct tax at the time of payment or at the time of credit, whichever is earlier, you deduct tax. If this whichever is earlier date is before 1st July 2021, then you will not deduct tax. Why? Because this section is applicable only on or after 1st July 2021. If this whichever is earlier date is on or after 1st July 2021, then only you will deduct. Okay, in the aggregate value, you will consider even those transactions which happened before 1st July 2021. But when you are deducting tax, the date of deduction should be on or after 1st July 2021. See, I'll give you some examples. You'll get even better understanding for sure. Just be a little patient through this discussion. Listen, let us take a situation. Let us say that before 1st July 2021, 20 lakhs sale happened before 1st July 2021. And on or after 1st July 2021, let us say 40 lakhs sale happened. Okay. So now when you see whether the aggregate, whether it is more than 50 lakhs or not, whether see 194Q will apply only if the aggregate is more than 50 lakhs. So when you see whether aggregate is more than 50 lakhs or not, you don't differentiate between these two periods. You consider the entire thing. What is the total? 60 lakhs. 60 lakhs is more than 50 lakhs. So yes, aggregate is more than 50 lakhs. Now, if the aggregate is more than 50 lakhs, section 194Q TDS at 0.1% will apply. On what it will apply? On the excess over and above 50 lakhs on the excess. So my total is 60 lakhs. So what is the excess, guys? Over and above 50 lakhs, the excess is 10 lakhs. So on 10 lakhs, TDS will be deducted at source under 194Q. Okay, so on or after 1st July 2021, 40 lakhs transaction happened. Out of 40 lakhs, on 10 lakhs, 0.1% TDS we will deduct at source. Then we saw the aggregate when we were considering whether the total is more than 50 lakh or not, we will consider the entire year. Even before 1st July 2021, we will consider. Considering even before 1st July 2021, total is 60 lakhs, more than 50 lakhs. Hence, yes, 194Q will apply. Okay, but it will apply only on the excess, above 50 lakhs. Above 50 lakhs is just 10 lakhs. So only on 10 lakhs it will apply. But listen, one more situation I'll give you. Let us say before 1st July 2021, it was 80 lakhs, let us say. On or after 1st July 2021, 10 lakhs sale happened, let us say. So aggregate, when you are seeing the aggregate, whether it is more than 50 lakhs or not, I'll consider for the entire year, these two periods I will not differentiate. So the aggregate is 90 lakhs. 90 lakhs is more than 50 lakhs. Hence, yes, 194Q will apply. The aggregate 90 lakhs. So what is the excess over and above 50 lakh? What is the excess? Over and above 50 lakhs, the excess is 40 lakhs, guys. Yes, now on this 40 lakhs, we're supposed to deduct tax at source. But we will deduct tax at source only on transactions which happened after 1st July 2021. I told you you will deduct tax only if the date of deduction is on or after 1st July 2021. So even though the excess is 40 lakhs, for how much transactions happened on or after 1st July 2021? Only 10 lakhs. Excess is 40 lakhs. But what is a transaction which happened after 1st July 2021? Only 10 lakhs. So only on 10 lakhs, 194Q tax will be deducted at source. You're understanding now. So when you're calculating the aggregate, for the aggregate, you will consider the entire year, 90 lakhs. 90 lakhs more than 50 lakhs. Hence, yes, 194Q will apply. But on what amount will you deduct tax at source? On the excess. Excess over and above 50 lakh is 40 lakhs. But you will deduct tax at source only on transactions which happened on or after 1st July 2021. The excess is 40 lakhs, but transactions which happened on or after 1st July 2021 is only 10 lakhs. So only on 10 lakhs, I will deduct tax at source. Why didn't we do all this discussion in the first scenario here? Because first scenario, if you see, the total was 60 lakhs. Excess is how much? Excess over and above 50 lakhs. Excess is 10 lakhs. So on 10 lakhs, we have to deduct tax at source. We have to deduct only on transactions after 1st July. After 1st July, 40 lakhs transaction happened. But we have to deduct tax only on 10 lakhs. 10 lakhs well within 40 lakhs. So we were able to deduct. Second scenario, excess is 40 lakhs. But on or after 1st July 2021, we had transactions only for 10 lakhs. So only on this 10 lakhs, we will deduct tax at source under 194Q. All right, I'll give you one more example. Now let us say before 1st July 2021, I had transactions worth 90 lakhs. And on or after 1st July 2021, I had transactions for 40 lakhs. So has my aggregate exceeded 50 lakhs or not? I'll consider the total. I will not differentiate between these two periods. Total is 130 lakhs, which is definitely more than 50 lakhs. So what is the excess over and above 50 lakhs? Over and above 50 lakhs is 80 lakhs, right? So on 80 lakhs, I'm supposed to deduct tax at source. But I am supposed to deduct tax at source only on transactions after 1st July 2021. How much is after 1st July 2021? 40 lakhs only. Excess is 80 lakhs, but on or after 1st July 2021 is 40 lakhs only. Hence, I will deduct tax at source only on this 40 lakhs. But had it been the other way round, had it been 40 lakhs before 1st July 2021 and 90 lakhs on or after 1st July 2021, aggregate I will consider entire year, which is 130 lakhs. Aggregate is definitely more than 50 lakhs. What is the excess above 50 lakhs? Excess above 50 lakhs is 80 lakhs. On this 80 lakhs, I'm supposed to deduct tax at source. But I'm supposed to deduct tax at source only on transactions on or after 1st July 2021. On or after 1st July 2021, 90 lakhs transaction I had. But excess is only 80 lakhs. 80 lakhs is well within 90 lakhs. So on this entire 80 lakhs, I will deduct tax at source. In simple words, if you want to shorten this entire discussion, in simple words, you see what is the excess. You see how much transaction happened on or after 1st July 2021. Out of these two numbers, you pick whichever is lesser. Only on this lesser number, you will deduct tax under section 194Q. But when you are finding aggregate, consider entire year. When you are seeing on how much tax has to be deducted at source, you see what is the excess. You compare it with the transactions on or after 1st July 2021. You see whichever is the lesser of these two numbers. On the lesser of these two numbers, you will deduct tax at source. Now clear? Yes. So this is it about 194Q discussion. Now shall we put down section 194Q? Shall we put down all the points that we discussed here? Yes, first of all, section 194Q puts responsibility on whom? Section 194Q puts responsibility on the buyer. It is telling the buyer, you deduct tax. Now, what are all the points that we studied under section 194Q? First of all, we learned that here the buyer should be a person whose turnover in the preceding previous year is more than 10 crore. Then we learned the seller should be a resident person. Then we learned the aggregate sale in the entire year should be more than 50 lakhs. Then we learned on if these conditions are fulfilled, then TDS rate will be 0.1% of the excess. When I say excess, I mean above 50 lakhs. But we said to calculate aggregate sale, you will consider entire previous year 21-22, but TDS you will deduct only on transactions which happened on or after 1st July 2021. Remember this, guys, you will deduct tax only on transactions which happened on or after 1st July 2021. Okay, then what are the other concepts we said? We said GST element. We never consider, if GST is shown separately, then we never consider GST element in section 194Q. Okay, then we said tax is to be deducted at source at the time of payment or at the time of credit, whichever is earlier. We also said the rate is actually 0.1%, but we have another section, section 206AA. 206AA says if the seller does not give his PAN number, then if it is any other TDS section, the TDS rate will be whatever is the applicable TDS rate or 20%, whichever is higher. But if section 194Q is applicable, then the rate will be the TDS rate, which is 0.1% or 5%, whichever is higher. Then we said even on advances, we are supposed to deduct tax at source, because when I pay advance, payment or credit, whichever is earlier, payment happens earlier. All right, guys. Then we learned in case there is any conflict with any other TDS section, then we will not apply 194Q. So 194Q will apply only if no other TDS section is conflicting. If any TCS section is conflicting, we will see which one is it. If section 206C1H is conflicting, then we said 194Q only we will apply. But if any other TCS section is getting applicable, then that other TCS section, that is what we will apply, we said. Okay. In no other TDS section should conflict, only then you can apply 194Q. In case any other TCS section is conflicting, then if it is 206C1H, then continue to apply 194Q. But if any other TCS section is applicable, then you apply that TCS section. Okay, see, it's actually very simple. This flow chart should make it simple for you. No other TDS section should apply. If 194 or 194Q, two TDS sections are applicable, you apply the other TDS section, ignore 194Q. In case any other TCS section is applicable, you see which one. Is it 206C1H or any other TCS section? If it is 206C1H, you apply 194Q. Why? Remember, I told you in 206C1H that 206C1H will apply only if no other TDS section is applicable. 206C1H is submissive. It is overridden by 194Q. So 206C1H and 194Q, if both are applicable, we always apply 194Q. But if any other TCS section is applicable, then you apply that TCS section, ignore 194Q. And then we said stock exchange transactions, on them section 194Q is not applicable. If the transaction happened through stock exchange, then I will not apply 194Q. Okay, are we clear? So this is it about the entire discussion regarding 194Q. I hope you're feeling confident about this now. Yes, shall we try one question regarding 194Q? Let us see if we are able to handle this question. Let's read the question first. Mr. Gupta, a resident Indian, is in retail business. His turnover for financial year 2021 was 12 crores. He regularly purchases goods from another resident, Mr. Agrawal, a wholesaler, and the aggregate payments during financial year 21-22 was 95 lakhs. Let's draw a diagram. We have two people, buyer and seller. Buyer is Mr. Gupta and seller is Mr. Agrawal. Okay, Mr. Gupta and Mr. Agrawal, both of them are residents. Buyer's turnover, if you see his financial year 2021 turnover, it was 12 crores. He regularly purchases goods from another resident. Aggregate payments during 21-22 was 95 lakhs. So this seller, Mr. Agrawal, has sold goods to Gupta, and the consideration which is due for these goods is totally 95 lakhs. For this 95 lakhs, they have given a breakup: 20 lakhs on 1st June 2021, then 25 lakhs on 12th August 2021, 22 lakhs on 23rd November 2021, and 28 lakhs on 25th March 2022. Aggregate, you see, aggregate will for sure be 95 lakhs. So for this 95 lakhs, they've given a breakup. Okay. Then Mr. Agrawal's turnover for financial year 2021. Mr. Agrawal's financial year 2021 turnover, if you see, that was 15 crores. Okay. They've given us information about Gupta also, about Mr. Agrawal also. They're asking us, based on the above facts, examine the TDS and TCS implications under the Income Tax Act. All right. Now, from the buyer's perspective, I will think about section 194Q. From the seller's perspective, I will think about section 206C 1H. But which of the two I told you I'll give priority? I'll always give priority to 194Q, I told you. If 194Q is applicable, I won't even think about 206C1H. We will consider 206C1H only if no other TDS section is applicable. So from the buyer's perspective, it's a purchase sale transaction. So 194Q and 206C1H, these are the two relevant sections. 194Q is TDS section, 206C1H is TCS section. I will not consider 206C first. I'll consider 194Q first. If 194Q criteria are fulfilled, I'll apply 194Q. I won't even have to apply 206C1H. Let us see. They are asking us in subdivision 1, examine TDS, TCS and implications. First, I will always check for 194Q TDS implication only. Now, what are the conditions I told you? What was the first condition we said? Buyer's preceding previous year turnover should be more than 10 crore. Buyer preceding previous year turnover is definitely more than 10 crore. It is 12 crore. We are doing the calculation for financial year 21-22. So, preceding previous year will be 2021. So, yes, buyers preceding previous year turnover, if you see, is definitely more than 10 crore. First condition fulfilled. Second condition, seller should be a resident. Question clearly says Mr. Agrawal is a resident. So Mr. Seller is a resident. Even this condition is fulfilled. Third condition, aggregate sale should be more than 50 lakhs. Entire year, if you see, don't have to differentiate between the two periods. Entire year, the aggregate sale should be more than 50 lakhs. Yes, even this condition is fulfilled. It is 95 lakhs. But then I told you, you will deduct tax only on the excess. See, what is the excess, guys? The excess, if you see, it is above 50 lakhs. Excess is 45 lakhs. But we will deduct tax only on transactions on or after 1st July 2021. Now, on or after 1st July 2021, totally how much transaction do you have on or after 1st July 2021? On or after 1st July 2021, it is totally 75 lakhs. Okay, excess is 45 lakhs. On or after 1st July 2021 is 75 lakhs. What did we conclude? We'll deduct tax on whichever is lesser. So on the excess 45 lakhs, we will deduct tax at 0.1%, which will be what, guys? 45 lakhs into 0.1%, 4,500 will be the tax which has to be deducted at source. For the aggregate, I considered the entire 95 lakhs, but on what amount should I deduct tax? I considered only on or after 1st July 2021. Excess 45 lakhs or 75 lakhs, whichever is lesser. 45 lakhs is lesser. So on that 0.1%, which is 4,500 rupees, this is going to be my tax to be deducted at source. Okay, now you got it. Now, when will this tax be deducted at source? Let us see that also. Let us go even more in deep. Okay, think from the buyer's perspective. On this 20 lakhs transaction, on 1st June 2021, he anyways wouldn't have deducted anything, because this section is applicable only on or after 1st July 2021. 1st June 2021, he wouldn't even have deducted anything. Then on 12th August 2021, when the transaction happened, 25 lakhs transaction happened, even here he would not have deducted anything, because the total was only 45 lakhs. 194Q tax will be deducted only if the total is more than 50 lakhs. But as on, see, I'm putting myself in the buyer's shoes on this date. On 12th August 2021, he is seeing only 45 lakhs transaction happened. He wouldn't have deducted tax. On 23rd November 2021, he's seeing totally how much transaction has happened. 20 on 1st June, 25 on 12th August, and 22 now on 23rd November. So he sees that total 67 lakhs transaction has happened. Now 67 lakhs, it has crossed 50 lakhs, right? So it has crossed 50 lakhs by how much? It has crossed 50 lakhs. What is the excess? 17 lakhs is the excess. So on this 17 lakhs at 0.1%, on 23rd November, 1,700 Mr. Buyer would have deducted at source. Do you agree with this? Pause for a moment. Think about this. Put yourself in the buyer's shoes. 23rd November, he's thinking total sale, total transactions during the year have reached 67 lakhs, which is more than 50 lakhs. More than 50 lakhs means 194Q is applicable only on the excess. But what is the excess? The excess is 17 lakhs. So 23rd November, 22 lakhs transaction he is doing, 17 lakh is the excess. So on the 17 lakhs, 1,700 he will deduct tax at source. You understood why I took 17 lakhs. Transaction is 22 lakhs. Excess is 17 lakhs. I told you, excess or the transaction after 1st July, whichever is lesser. The transaction is 22 lakhs, but the excess is 17 lakhs right now. I'm putting myself in the buyer's shoes on 23rd November. As on 23rd November, excess is 17 lakhs and the transaction is 22 lakhs. So whichever is lesser, which is lesser, 17 lakhs, on that only you will deduct tax at source. Okay, see, in fact, not even 22 lakhs. On 23rd November, to see on how much tax has to be deducted, what will he consider? He'll see what is the excess. Excess is 17 lakhs. Okay, then what are the transactions which happened on or after 1st July 2021? On or after 1st July 2021, the transactions which happened are 47 lakhs. So these two numbers, whichever is lesser, the buyer will see 17 lakhs is lesser. So on 17 lakhs, 1,700, he will deduct tax at source. Then on 25th March 2021, see, already tax 194Q TDS is already attracted. 23rd November, he has already deducted, which means that point onwards, he anyways has to deduct. So 25th March, what happened? He had a transaction of 28 lakhs. So on that 28 lakhs, 1%, 2,800, he will deduct tax at source. Here at this stage, no need to think about, 0.5. Okay, wait. Even at this stage, let us do the same thinking that we did earlier. What is the total now? 67 lakhs plus this 28 lakhs. Total becomes 95 lakhs, right? Now, what is the excess? The excess is going to be 45 lakhs. And what are the transactions which happened on or after 1st July 2021? Transactions on or after 1st July 2021 are 75 lakhs. So which is lesser? 45 lakhs. On 45 lakhs, tax is to be deducted. But on 17 lakhs, we already deducted tax. So 45 minus 17, only on 28 lakhs, he will now deduct tax at source. So 2,800 he will deduct. Totally 4,500 he would have deducted. This is what we had written over here. Okay, put yourself in the buyer's shoes. On 1st June 2021, if this is the only transaction on 1st June 2021, what he would have thought? He would have thought, anyways, before 1st July 2021, section itself not applicable, nothing he would have deducted. Then on 12th August 2021, what he would have deducted? What he would have thought? He would have thought, okay, aggregate is what? 20 lakhs on 1st June, 25 lakhs on 12th August. Aggregate is only 45 lakhs. Aggregate is not more than 50 lakhs. He would have thought, okay, no 194Q. Then on 23rd November, another transaction happened. 23rd November, what he would have thought? Aggregate, he'll consider entire year. Aggregate would be 1st June 20 lakhs, 12th August 25 lakhs, 23rd November 22 lakhs. It's becoming 67 lakhs, which is more than 50 lakhs, right? So the excess he would have seen is 17 lakhs. But he would have also seen what are the transactions which happened on or after 1st July 2021. On or after 1st July 2021 is only 25 lakhs and 22 lakhs, which is 47 lakhs. So these two numbers, whichever is lesser, on 17 lakhs, he will deduct tax at source on 23rd November 2021. Then 25th March 2021, he'll see aggregate. Aggregate for the entire year has become 95 lakhs. 95 lakhs, which is more than 50 lakhs, which means 194Q is applicable. But on how much? On how much should you deduct? See the excess, which is 45 lakhs. See the transactions which have happened after 1st July 2021, which is 75 lakhs. These two numbers, whichever is lesser, 45 lakhs. Now this 45 lakhs, out of this 17 lakhs, I've already deducted tax at source. So only on the balance 28 lakhs, 0.1% I will deduct tax at source. This is nothing but a simple application of what I've been telling you for quite some time. Aggregate value, consider the entire year. But whether you should deduct tax at source or not, the transactions you consider only on or after 1st July 2021. Whether aggregate has crossed 50 lakhs or not, you'll consider the entire year. But when you're deducting tax at source, you will deduct tax at source only on or after 1st July 2021. So on or after 1st July 2021, on what amount should you deduct tax at source? How will you see? How will you check? You will see what is the excess. You will see what are the transactions which happened on or after 1st July 2021, whichever is lesser you pick. On that lesser number, you will deduct tax at source at 0.1%. I hope this is crystal clear. Yes, this 4,500 breakup only we've seen here. Okay, so what are the other conditions, by the way? GST, let us say it is not shown separately. Let us say seller has given PAN, which means 206AA, not applicable. Yes, at the time of payment or credit, whichever is earlier, tax was deducted at source. No other TDS section is applicable, let us say. No other TCS section is applicable. Transaction is not through stock exchange. Now that 194Q we have applied, section 206C1H will we even think of? No. If any other TDS section is applicable, then 206C1H we ignore. That is the answer to our first subdivision. Then they are asking us, would your answer be different if Mr. Gupta is a buyer, if his turnover of the preceding previous year was 8 crores? Guys, if his preceding previous year turnover is 8 crores, if it is below 10 crores, then 194Q will not even apply. Right? So answer to the second subdivision, if the buyer's preceding previous year turnover is below 10 crores, section 194Q will not apply. Now that 194Q is not applicable, section 206C1H, we can start checking, guys. We can start checking whether this is applicable or not. Now let us see what are the conditions that we put for 206C1H. 206C1H, we said seller's turnover preceding previous year should be more than 10 crore. Yes, the seller's preceding previous year turnover is definitely more than 10 crore. See, what is Mr. Agrawal's turnover preceding previous year? 15 crores. More than 10 crores. Condition 1 fulfilled. Then what is the next condition? Aggregate value of goods sold should be more than 50 lakhs. See, 206C1H, you don't have to think about 1st July 2021 and all, because 206C1H was had come into force in previous year 2021 itself. Okay, so we are calculating for previous year 21-22. 21-22, we will not apply that criteria. See, when I was telling you about this this particular point about 1st July 2021 in 194Q, I told you this point will apply only in 21-22. Other years, you will not bother about that 1st July 2021 date. Why? Because this was the first year in this section is applicable. Similarly, 206C1H, if you see, this was applicable previous year 2021 onwards itself. We are calculating for previous year 21-22, which is not the first year of 206C1H. So we don't have to bother about any date and all, entire year we will consider. Okay, aggregate value should be more than 50 lakhs. Yes, aggregate value is more than 50 lakhs. Okay, it was in fact 95 lakhs. Then no other TDS section is applicable. No other TCS section is applicable. Even this criteria is fulfilled. What are the other conditions? Yes, it is not export. So on what at what rate will you collect tax at source? TCS will be collected at the rate of 0.1% on the excess. What was the excess? Total was 95 lakhs. Excess was 45 lakhs. So 45 lakhs into 0.1%, 4,500 is a tax that would be collected at source. On the excess, we will collect tax at source at the rate of 0.1%. Now, even this 4,500, guys, let us see a breakup even here. Okay, see, the first transaction happened on 1st June 2021. Now, we will put ourselves in the seller's shoes. Seller has to collect tax. 1st June 2021, only 20 lakhs transaction happened. So, he would have thought, okay, total has not exceeded 50 lakhs. Let me not collect tax at source. Then on 12th August 2021, one more transaction happened, 25 lakhs transaction happened. But even over here, aggregate, if you see, is only 45 lakhs. So seller would have thought 50 lakhs not exceeded. I will not collect tax at source. But on 23rd November, when the transaction happened, total was 67 lakhs. Now 67 lakhs is more than 50 lakhs. So on the excess on 17 lakhs on 23rd November, he would have collected tax at source. You understood? On 1st June 2021, he would not have collected tax at source. On 1st August 2021 also, he would not have collected. On 12th August 2021 also, he would not have collected tax at source because the amount did not exceed 50 lakhs. But when the third transaction happened on 23rd November 2021, the total became 67 lakhs. So on the excess, only on the excess we collect tax at source, right? The excess is 17 lakhs. On 17 lakhs, 0.1%, 1700, he would have collected tax at source. Then when the last transaction happened on 25th March 2022, here the total became 95 lakhs. So what is the excess? 45 lakhs. But out of 45 lakhs, on 17 lakhs, I already collected tax at source. So on the balance 28 lakhs, 2,000, he would have collected tax at source. Totally 4,500 tax he would have collected at source. Here I will not look at before 1st July, after 1st July and all, because previous year 2021 was the first year. We are doing the calculation for previous year 21-22. Previous year 2020, 21-22, it is fully applicable throughout the year. It is applicable, this section. So 1st June 2021, nothing he would have collected because did not exceed 50 lakhs. Even 12th August, he wouldn't have collected because did not exceed 50 lakhs. 23rd November, it did exceed 50 lakhs. Only on the excess, we collect tax at source. 25th March, also it has exceeded 50 lakhs. On the excess, 45 lakhs, we collect tax at source. But on 17 lakhs, we have already collected. Just on the balance, 28 lakhs, he will collect tax at source. Clear with the first two scenarios, first two questions. Now let's go to the third part, the last part. Would your answer to 1 and 2 change if PAN has not been furnished by the buyer or seller? In my first situation, I applied 194Q. Now, if the seller does not give his PAN number, then instead of 0.1%, I will apply section 206AA, guys. 194Q, seller is not giving PAN, we'll apply 206AA and we will deduct tax at the rate of 5% instead of 0.1%, right? So so what will be 5% instead of 0.1%? 45 lakhs into 5%, 2,25,000. This will become the amount of tax to be deducted at source. In case the seller does not give his PAN number, then we will deduct tax at source at the rate of 5% instead of 0.1%. That will turn out to 2,25,000. Similarly, in the second part, that is 2061H, when we applied, here if the buyer does not give his PAN, then section 206CC will apply. And 206CC says the applicable TCS rate into 2, which is going to be what? 0.1% into 2 will be 0.2%, guys. This rate or 1%, right? Or 1%, whichever is higher. Obviously, 1% will be higher. So instead of 0.1%, if I collect tax at 1% on the excess 45 lakhs, if I calculate 1%, 45,000 will become the tax to be collected at source. Okay, so in case PAN is not furnished, 206AA, 206CC will start applying. Under 206AA, 5% will become the applicable rate. Under 206CC, 1% will become the applicable rate. Accordingly, the TDS TCS number will increase. Is it still clear? Yes, so that is it about our entire discussion regarding 2061H and 194Q. I've gone way more in depth than what is actually required. You be thorough with this discussion, guys. For sure, any question they ask you will be in and around this, and very easily you will be able to certainly tackle. Okay, I'm hoping all of you are crystal clear. Even beyond this, if you guys have any doubt in this particular section or in this discussion, please make sure you WhatsApp your query to me and get it clarified. All right, so we under TDS, we have learned about section 194P and section 194Q in the last part of the discussion. Going to the next part of our TDS discussion, we are going to be learning about section 206AB here. Listen carefully. I have two people, Tom and Jerry. By the way, this section is connected with TDS. I'm telling you this because a similar section in TCS also I will be discussing with you. Tom is the deductor, let us say, and Jerry is the deductee. Right now, we are in previous year 21-22, let us say. If you look at two preceding previous years, that is preceding previous year 2021 and preceding previous year 1920, if you look at both the preceding previous years, Jerry has not filed his income tax return. For both the preceding previous years, section 139(1) due date is over, let us see. Condition number 1, for both the preceding previous years, Jerry has not filed income tax return. For both the preceding previous years, condition number 2, 139(1) due date is over. And for both the preceding previous years, if you see, how much ever tax Tom is supposed to deduct from Jerry and how much ever tax Tom is supposed to collect from Jerry, both put together is exceeding 50,000. Each of the years, if you see, TDS plus TCS is at least 50,000. Three conditions. Condition number 1, for both the preceding previous years, the deductee did not file income tax return. Condition 2, for both the preceding previous years, section 139(1) due date is over. Condition number 3, for both the preceding previous years, the TDS and TCS applicable is at least 50,000. All the three conditions should be fulfilled. If all the three conditions are fulfilled, then the TDS rate will change. The TDS rate will become 2 times of whatever the applicable rate is, or 5%, whichever is higher. TDS rate will be 2 times of whatever is the applicable rate, or 5%, whichever is higher. For example, let us say Tom was supposed to pay interest to Jerry. Okay, on this interest, Tom was supposed to deduct tax under section 194A. He was supposed to deduct tax. Now, Jerry has fulfilled all the three conditions. Jerry did not file income tax return. Even 139(1) due date is over. TDS, TCS is also at least 50,000. Let us say all these conditions are fulfilled. Now 194A, what is the tax rate? What is the TDS rate generally in 194A? What is 194A about? 194A is about interest, and under 194A, our TDS rate is 10%. So, all the three conditions are fulfilled, hence the 10% will change. The 10% will become 2 times of whatever is the rate, 2 times of 10%, that is 20%, or 5%, whichever is higher. That is, instead of 10% now, 20% will start applying. Did you follow? Yes, so I have three conditions, guys. Condition number 1, the deductee, all the 2 preceding previous years, he did not file his income tax return. Condition number 2, both the preceding previous years, 139(1) due date is over. Condition 3, both the 2 preceding previous years, TDS and TCS, if you see, is at least 50,000 in each year. If all the 3 conditions are fulfilled, then the TDS rate will change. Under 206AB, the TDS rate will become 2 times of the applicable rate, or 5%, whichever is higher. Okay, but 206AB is not applicable to some sections. 206AB is not applicable to some 4 to 5 sections. Listen carefully. Number 1, it is not applicable to section 192, salaries. Number 2, it is not applicable to section 192A, your PF amount withdrawal. Then it is not applicable to 194B and 194BB, your lottery winnings, horse race winnings and all. And then it is also not applicable to section 194N, your cash withdrawal section. To these 5 sections, 206AB will not apply, which means if the deductor is supposed to deduct tax under these sections, then 206AB will not apply. So 206AB, point number 1, 3 conditions should be fulfilled. Point number 2, if all the 3 conditions are fulfilled, the deductor will have to deduct tax at a different rate, which is 2 times of the applicable rate, or 5%, whichever is higher. Point number 3, but if the deductor is deducting tax under any of these 3 sections, then under these 5 sections, then 206AB will not apply. But now we are CA students, we are professional students, we love complications, right? Listen to the next complicated scenario. What if a situation like this applies? Tom is a deductor and Jerry is a deductee. Okay, Tom is paying interest to Jerry. Now Jerry is fulfilling 206AB, all the 3 conditions Jerry is fulfilling. That is, all the 2 preceding previous years he did not file income tax return. 139(1) due date is over. TDS, TCS is at least 50,000 in both the preceding previous years. 206AB conditions, all the 3 conditions are fulfilled, which means the TDS rate will now become 2 times of the applicable rate. Interest means section 194A will be the TDS section. So 2 times of the applicable rate is, let us say, 2 times of 10% becomes 20%, or 5%, whichever is higher. So which is higher? Obviously 20%. But this Mr. Jerry, he is also not giving his PAN number, which means section 206AA will also start applying, guys. And what does 206AA say? What will the rate become? 206AA says whatever is the applicable rate, which is 10%, or 20%, whichever is higher. Which is higher? 20%. So 206AB is also applicable, 206AA is also applicable. So if both the sections are applicable, out of these two numbers, you pick whichever is higher, which is going to be 20%. In simple words, if 206AA and 206AB, if both of them are applicable, then you apply both and you see whichever is the higher of the two, you apply that. Are we clear, guys? So if 206AA, 206AB, if both are applicable, that is 206AB, 3 conditions deductee is fulfilling. He is not giving PAN also. You apply 206AB and find the rate. You apply 206AA and you find the rate. Out of both the rates, you pick whichever is the higher rate. Okay, so this is it about 206AB. If you've understood 206AB, a very similar section we also have in TCS. We have 206 CCA, section 206 CCA in TCS. So what we just studied, 206AB, that was connected to TDS, and now 206 CCA, this is going to be connected with TCS. Here also I have two people in my story, let us say Tom and Jerry. Tom is the collector of tax. From Jerry, he is supposed to collect tax. Same 3 conditions, guys. Jerry is fulfilling all the 3 conditions. That is, 2 preceding previous years, he did not file income tax return. Both the 2 preceding previous years, 139(1) due date has expired. Then both the 2 preceding previous years, if you see, TDS and TCS put together is at least 50,000 in each of the years. Exact same thing, guys. All the 3 conditions are fulfilled. Then the TCS rate will change. Same thing even here. TCS rate will be 2 times of whatever is the applicable rate, or 5%, whichever is higher. 2 times of the applicable rate or 5%, whichever is higher. Even over here, I will discuss the same thing. What if Jerry is not giving his PAN number? Then 206CC will also apply. We just discussed this some time back. 206CC will also apply. If 206CC is also applicable, then you apply 206CCA, you find the rate. You apply section 206CC and you find the rate. Out of both of them, you pick whichever is higher. Okay, so 206CCA and 206AB, exactly same. Only thing difference, 206AB will apply to TDS and 206CCA will apply to TCS. If you understood 206AB, 206CCA, very easily you would have understood. Okay, so with this, we are done learning with 2 connected sections, 206AB and 206CCA. Now, looking at the remaining provision under TCS, we've learned about 206C1H, but we have some more TCS sections. Like, see, generally what happens in TCS, we have the buyer and we have the seller, right? When a buyer is paying to the seller consideration for the goods, along with the consideration, the seller will also collect from the buyer TCS. That's how it works. So the seller is going to collect from the buyer not only consideration for the goods, he'll also collect from the buyer TCS. Right. Now, at what rate will he collect TCS? 206C1H, we've already seen 0.1%. We have some more sections. We have some more transactions also. Like, for example, for alcoholic liquor for human consumption, 1% TCS will be collected by the seller. Tendu leaves, 5% TCS will be collected. Timber obtained under forest lease, 2.5%. Timber obtained by any other mode, 2.5%. Any other forest produce, 2.5%. Scrap, 1%. Minerals, coal, lignite, iron ore, 1%. Motor vehicle, if the value is more than 10 lakhs, 1%. Here, each vehicle, each transaction separately we will see. and granting a lease or a license of parking lot, toll plaza and all 2%. Just give a glance at these numbers. I would say the important numbers are scrap, motor vehicles and alcoholic liquor. These according to me are the important ones generally asked. Alcoholic liquor 1%, scrap 1%, motor vehicle 1%. Timber 2.5%. Tendu leaves 5%. Minerals like coal, lignite, iron ore and all 1%. Lease, license and all 2%. Okay, now listen. For these transactions, that is apart from motor vehicle, other transactions, the buyer should be a person who is buying the goods because he wants to resell the goods. He should not be buying the goods for his own consumption. For apart from, if I ignore point number 8, the others, he should be buying because he wants to resell. But motor vehicle, the buyer should be a person who is buying the motor vehicle for himself. He should not be buying the motor vehicle to resell. You're understanding the opposite scenarios here. Apart from motor vehicle, other transactions, the person who is buying the goods, he must be buying the goods for his own. He must not be buying the goods for his own consumption. Apart from motor vehicle, everything else, if you want to apply TCS, buyer should be a person who is buying the goods because he wants to resell the goods. Motor car alone, TCS will apply is that person if the buyer is buying the motor car for himself. Only then TCS will apply. And also the value of the motor vehicle should be more than 10 lakh rupees. Only then TCS will apply. And also remember guys, in all the transactions, the seller should be a person, if he's like how I told you in 194A, 194H, J and all, even in TCS, the seller should be a person, if he's individual or HUF, preceding previous year turnover should be more than 1 crore, preceding previous year gross receipts should be more than 50 lakhs. That provision will apply even here in TCS. Okay, so in TCS, for the other provisions under TCS, remember these rates. All right, remember other transactions, TCS will apply if the buyer is buying the goods not for his personal consumption but because he wants to resell. Motor vehicle, TCS will apply only if he is buying the motor vehicle more than 10 lakh rupees for himself. And TCS will apply only if the seller, if he happens to be individual or HUF, preceding previous year turnover should be more than 1 crore, gross receipts should be more than 50 lakhs, or he should be any other person. Okay, now section 206AA, what did I tell you? In 206AA, if I don't give PAN, if the deductee does not give PAN, also does not give Aadhaar, then the TDS rate will be whatever is the rate applicable or 20%, whichever is higher. Now, similarly, even in TCS, we have a section 206CC. 206CC says, in case the buyer is not giving his PAN, is not giving his Aadhaar, then TCS rate will be 2 times the applicable rate or 5%, whichever is higher. We've already discussed this earlier also. So 2 times the applicable rate or 5%, whichever is higher. But in case 206C1H is applicable, instead of 5%, I will apply 1%. So it is 2 times the applicable rate or 5%, whichever is higher. 206AA, 206CC, similar sections. 206AA says rate given in the section or 20%, whichever is higher. 206CC says 2 times the rate given in that section or 5%, whichever is higher. Now, under TCS, we have 2 more transactions which I want to discuss with you. Even these are very new transactions only. I think Finance Act 2020 only had introduced them. Overseas remittance. Here I'm talking about an authorized dealer who receives amount under the liberalized remittance scheme from a buyer. Basically, there are 2 people, buyer. Just a moment. Yeah, listen. So there is a buyer, he has to make a payment. He has to make a payment outside India. So through an intermediary, through an authorized dealer, he's going to make the payment outside India. So this authorized dealer, he has to collect from the buyer TCS. That is what this discussion is all about. There is a buyer, there's a person, he has to make an overseas remittance. Overseas remittance means what? Overseas remittance means he has to make a payment outside India. All right. So he'll make a payment through somebody, right? He'll make a payment through an intermediary. So he's going to make a payment through an authorized dealer. That authorized dealer will collect from this buyer TCS also. Okay. Now, how much TCS will be collected depends upon what is the amount. If the amount is within 7 lakhs, nothing will be collected. If the amount is more than 7 lakhs, 5% of the excess will be collected. But if it is more than 7 lakhs and if the remittance is out of an education loan, then only 0.5% will be collected. You understood my story? There is a buyer. He has to make a remittance outside India. He will make the remittance. He will make the transfer through an intermediary authorized dealer. The authorized dealer will collect from the buyer TCS also if the amount is more than 7 lakhs. He will collect TCS at the rate of 5% if it is more than 7 lakhs. On the excess, he will collect at 5%. But in case the money is more than 7 lakhs but out of education loan, then only 0.5% he will collect. And when will he collect? At the time of debit or the time of receipt, whichever is earlier. This is about overseas remittance. Similarly, we have another transaction, overseas tour package. This is relating to intermediaries like Make My Trip and all. So a person who is selling an overseas tour program, a foreign travel program, if Make My Trip is selling, then from the buyer, 5% TCS has to be collected. Make My Trip is selling one package, one overseas, one foreign travel package, let us say. On that foreign travel package, 5% TCS they will collect. Are we clear until here? Okay, so we have two new transactions which we discussed, overseas remittance and overseas tour package. Overseas remittance, I want to make a payment outside India through authorized dealer. I'm sending the money. If it is more than 7 lakh, he will collect TCS from me. Overseas tour package, the seller of overseas tour packages will collect tax at source from me at the rate of 5%. This is another transaction relating to TCS which you should be aware of. Till here clear? So with this, guys, our major discussion under TDS and TCS, we are done revising. Now listen, there's another section, section 197A. See, basically what section 197A says is, let us say there is a person, he's a deductee. Against him, tax is going to be deducted. But if his total income is within basic exemption limit, then TDS deducted on his income, useless, right? He doesn't have any tax liability. Person who is giving him interest, let us say there is another person who is giving him interest. This person is deducting tax at source. But for the recipient, for the deductee, total income is within basic exemption limit, which means he has no tax liability. Still, the person who is giving him interest is deducting tax. It will be unnecessarily, right? Because later he'll simply go and claim a refund of this. So in such cases, this person can give form 15G, form 15H. He can declare through these forms that, listen, my total income is within basic exemption limit, which means I don't have any tax liability. So please don't deduct any tax against my income. I anyways don't have any tax liability. By two forms, form 15H is for senior citizens and super senior citizens. Form 15G is for others. So if a person estimates his tax liability to be 0, he can ask the deductors of tax not to deduct tax against his income, but for that he'll have to furnish form 15G or form 15H. Form 15H if he's senior citizen or super senior citizen, otherwise form 15G he'll have to furnish. All right, now this form 15G and form 15H should contain the PAN number of that person. In case he is not putting his PAN number, then 20% tax will be deducted. The person who's giving form 15G, form 15H, he has to put his PAN number. If he doesn't put his PAN number, then TDS at 20% will be deducted. Okay, guys. Now listen to the next point. Another point I wanted to discuss with you. This point is important. In case income is clubbed, okay, then who is going to enjoy the TDS credit? The person who enjoyed the income or the person who's paying tax? Obviously, the person who's paying tax. Like for example, let us say we have minor child and parent. Minor child has earned some interest income. Okay, on this interest income, the parent will pay tax. It will be clubbed in the hands of the parent. The person who paid this interest, the person who had given this interest, that person deducted tax. That tax credit, the TDS credit, who will enjoy? The person who's going to pay tax on this income, the parent only will enjoy the TDS credit. So in case the income is clubbed, the person who's actually going to pay tax on the income, only that person will enjoy the TDS credit. Okay, this was a small thing I wanted to discuss with you. Then after this, I want to also discuss with you about the due dates. And when do you pay the TDS, when do you pay the TCS and all. Let us discuss the due date for payment of TDS and TCS. See, look at this. You are supposed to pay the TDS. Now listen, I'll explain this to you in very simple words. Let us say there are two people, the deductor and the deductee. The deductor has deducted tax. Now he has to pay it to the government. Similarly, the buyer and the seller. The seller has collected tax. Now seller has to pay to the government. So even deductor has to pay TDS to the government. Seller also has to pay TCS to the government. When will they pay? They have to pay within 7 days from the end of the month. Like for example, for April, they have to pay by May 7th, they have to pay. All right. But for the month of March alone, they get time till 30th April. TCS, you don't get extra time. TCS, you have only one time limit, pay within 7 days from the end of the month, that's all. TDS alone, for the month of March alone, you get extra time. March will not be 7th April, March will be 30th April. Okay, so by when do you have to remit it to the government? It's generally 7th of the next month, whether TDS, whether TCS. But TDS alone, for the month of March alone, not 7th April, it will be 30th April. You get extra time. All right, now listen. That is about payment of TDS and TCS. Apart from this, the deductor of TDS and the collector of TCS, they also have to file to the income tax department some returns, TDS return and TCS return. That has to be quarterly return. So for the first quarter, April to June quarter, TDS return has to be filed by July 31, TCS return has to be filed by July 15. Next quarter, basically what you do is when the quarter ends, after the quarter, next month end, quarter is ending June 30, next month end, July 31, TDS return has to be filed, but July 15, TCS return. Similarly, quarter ending in September, that is July, August, September, second quarter, September the quarter is ending, next month, October. So by October 15, file TCS return, by October 31, file TDS return. Next quarter, October, November, December. December quarter is ending, next month Jan. By Jan 15, file TCS return. By Jan 31, file TDS return. But for the last quarter, March, the quarter is ending in March, Jan, Feb, March. Next month will be April. But no, your due date for filing the return will be in May. It will be May 15 for TCS and May 31 for TDS. So when do you make the payment of tax to the department? By 7th of the next month. For the month of March alone, you get time till April 30. When do you file the return? Quarterly, you file the return. Next month, after the quarter is over, next month 15th, you file TCS return. Next month end, you file TDS return. For the month of March alone, it will not be April, it will be May 15 and May 31. Okay, remember quarterly return and monthly payment. Monthly, you make the payment and quarterly, you will file the return. Okay, then 234E, this is important. If you don't file this TDS TCS return, if you don't file, then 200 rupees fees you will have to pay every day during which the default continues. Per day delay, 200 rupees fees you have to pay. That is 234E. And now listen to one last concept, guys. In case I did not deduct tax on time, if I do a delay in the deduction of tax, then I'll have to pay interest at the rate of 1% per month or part thereof. But if I deducted tax on time, but I did not remit the tax to the department on time, then I'll have to pay 1.5% per month interest or part thereof. If I did not even deduct on time, 1% per month or part thereof. I deducted, but I did not remit 1.5% per month or part thereof. Now 1% per month or part thereof of the TDS amount, from when to when? From the due date on which you should have deducted till the actual date of deduction. When did you actually deduct? Okay. Now this 1.5% per month is you deducted tax on time, but you did not remit on time. So for this 1.5% per month, you will pay for which period? You will see what is the actual date of deduction. When did you deduct the tax? From that till the actual date of remittance. When did you actually remit the tax? Okay, so for deduction, if you do a delay in deduction, you'll have to pay interest at the rate of 1% per month. But if you deducted but you did not remit, you'll have to pay interest at 1.5% per month. For this, I will discuss a question with you. Listen carefully. See, look at this question here. An amount of rupees 40,000 was paid to Mr. X on 1st July towards fees for professional services. See, fees for professional services 40,000. Section 194J will apply. 40,000 more than 30,000. we should have deducted tax on 1st July, but it was paid without deducting tax. Another payment of 50,000 was due to X on 28 February. So two transactions, 40,000, 50,000, total 90,000. Tax 10%, 9,000 on the entire amount of 90,000 was deducted. So two transactions, 40,000 and 50,000. On 40,000, tax should have been deducted on 1st July itself, but tax is being deducted only on 28 February. So 1st July to 28 February, 8 months delay, exactly 8 months delay. So you deducted tax late, so 1% interest. 4,000 rupees is the tax amount. How 4,000 rupees? 40,000 is the amount of service, amount of technical fees. So 194J, 10% is supposed to deduct tax. 40,000 into 10%, 4,000 is a TDS number. On that 1%, because I'm deducting tax late into 8 months. How 8 months? In July, I should have deducted on 1st July. I'm deducting only on 28 February. So July, August, September, October, November, December, Jan, Feb, it will be 8 months. So for 8 months, 320. Then we deducted 9,000. We deducted when on 28 February. So next month, March 7th, we should have remitted, right? But when are we remitting? Tax of 9,000 was deposited only on 22nd June. We're remitting also late. So this 9,000 we deducted on time, but we're remitting late. So because remitting late, 1.5% per month interest we have to pay. For how many months? How many months? We will not start counting from 7th March. No, we will count from the date of deduction. We deducted on 28th February 2020. We are remitting on 22nd June 2020. So 28 March, 28 April, 28 May. It will be 3 months and some more days. It's per month or part thereof. So even fraction you will consider as whole month. So even though it is 3 months and some 20 days, you'll count it as 4 months. So 9,000 into 1.5% into 4, 540. Total 860 we have to pay interest. It's 1% per month. So please don't do 8 by 12. It's 1% per month for 8 months. 1.5% per month for 4 months. Okay, this is important. This is it about our discussion on TDS and TCS. All right, but before I close this, I just want to give you one very quick revision of the sections. All right, I'll go one by one. I'll keep segregating the sections into some parts also, so that you'll get an idea of the priority sections as well. All right, so first of all, we had section 192 relating to salary. Here we can pay up to basic exemption limit without deducting tax. Beyond that, we have to deduct tax on the slab rates. We have to also deduct surcharge and cess here. Then we had section 192A relating to PF withdrawal. Less than 50,000 we can pay without deducting tax at source. More than 50,000, 10% we have to deduct tax at source. Okay, then we had section 194 relating to dividend and section 194K relating to interest on units. In both 5,000 we can pay without deducting tax at source. In both 10% is a TDS rate. Okay, then we had section 193 also. This is interest on securities. 10% is the TDS rate. Here we don't have to deduct tax at source if they're listed securities. We don't have to deduct tax at source if the amount of the interest is within 5,000. Right? These sections not very important. Then we have section 194A, section 194C, section 194H, section 194I, and 194J. These are important sections. Under 194A, C, H, I, J, in all the 5, we said that if the deductor happens to be individual or HUF, preceding previous year turnover should be more than 1 crore, preceding previous year gross receipts should be more than 50 lakhs. 194A is about interest, 194C is for works contract, 194H is about commission, 194I is relating to rent, and 194J is relating to professional services. 194A, how much tax you can pay without deducting, how much interest you can pay without deducting at tax at source depends upon who the deductor is. Is a deductor a banker or any other person? If deductor is a banker, it depends upon who the recipient is, senior citizen or non-senior citizen. If senior citizen, then 50,000, otherwise 40,000. Any other deductor, we said 5,000. 194C, 30,000 single transaction, 1 lakh aggregate transaction. Rate depends upon who the recipient is, who the deductee is. If deductee is individual or HUF, 1%, otherwise 2%. 194H, we can pay up to 15,000 without deducting tax at source. Beyond 15,000, we have to deduct tax at the rate of 5%. 194I rent, aggregate 2,40,000 we can pay without deducting tax at source. 194J, each category we have 30,000 limit. For director fees, no limit. Even small amount we have to deduct tax at source. These 5 are important sections. Then we learned section 194B and section 194BB. These sections are about betting income, lottery income, horse race incomes and all. Up to 10,000 we can pay without deducting tax at source. More than 10,000 we have to deduct tax at the rate of 30%. Okay. Then after all these sections, we also learned about section 194D. Remember 194D, which was about insurance commission. We're supposed to deduct tax at the rate of 5% if it is more than 15,000. Then we learned about section 194DA. If the insurance policy, on the insurance policy taken on or after 1st April 2012, premium is more than 10%. Or policy is taken before 1st April 2012, but premium is more than 20%. Handicapped premium is more than 15%. ULIP, KMIP and all. If the payment which the insurance company is now making is more than or equal to 1 lakh, then TDS will be applicable under 194DE at the rate of 5%. 5% of the amount which they are paying me now minus all the premiums which I've paid them already. This is another important section. Then we learned about section 194E, where I'm making a payment to non-resident sportsman, to a non-resident foreign entertainer, to a non-resident sports association. I deduct tax at the rate of 20% plus surcharge plus cess. Then we spoke about section 194EE. This was about an NSS, National Savings Scheme. We spoke about section 194G, Lottery Commission. They are not very important sections. Then after all these sections, we spoke about section 194IB, remember, where I am paying rent. No doubt I am paying rent. But then 194I is not applicable either because it's for personal purposes or individual HUF. Deductor is individual or HUF with turnover less than 1 crore, gross receipts less than 50 lakhs. 194IB we had learned. Last month, remember last month alone we will deduct tax at source. But if TDS is more than last month's rent, we said we will restrict to the last month's rent. That was 194IB. Then we spoke about 194LA in case there is compulsory acquisition and the compensation is more than 2,50,000, then at 10% TDS will be deducted at the time of payment. Then we spoke about section 194M, where works contract payment, professional fees or commission, but 194C are not applicable. If aggregate is more than 50 lakhs under 194M, tax will be deducted at source. Then we spoke about 194N relating to cash withdrawal. Remember, only on excess of 1 lakh, on the excess alone, tax will be deducted at the rate of 2%, we learned. Then we learned about section 194O. This was about the e-commerce participant. 1% tax will be deducted at source. Then the new sections 194P relating to senior citizens we studied. And then finally we learned about 194Q. Apart from this, TCS section 206C1H. Apart from this, we learned about other TCS provisions also. Now this bucket here, this is going to be your most important bucket. I'll say category A. This bucket here, this will be your second important bucket. I'll say category B. And this bucket here will be your least important bucket. I'll say category C. But please don't skip any of the sections. Okay, apart from all these sections, we also learned a little extra concepts like 15G, 15H, 206AA, 206CC. Then we also spoke about the interest, 1% and 1.5% and all. Now, are you feeling at least little bit better about this chapter, guys? Yes, make sure you tell me in the comment section. Is anybody still thinking of skipping this chapter? Any provision, even one of you find any one section difficult, I will do that entire section all over again. All right, so please tell me, watch the entire session. In case you still feel you're getting stuck at one particular place, see, I'm at least assuming that you've learned at least once before. If you're learning this afresh for the very first time, then obviously this is not the place where you learn TDS and TCS. This is a place where you're just revising what you're learning the day before the exam, quickly finishing it off. That's the whole objective behind this session here. Right. So I really hope none of you, at least now, none of you are thinking of skipping this chapter. Do this really well, guys. Trust me, you're going to thank yourself for being diligent about this chapter. This chapter, advanced tax assessment procedures put together, minimum 10 to 12 marks you can expect, which is quite a lot. right? So your basic concepts, your residential status, exempt incomes, agricultural incomes, TDS, TCS, assessment procedures, advanced tax, set of carry forward. These chapters do really well. Don't focus just on the 5 heads of income, okay? Do even these chapters really well, because this is where a lot of marks will get caught. All right, guys, all the very best. Do well. I really hope the tax is a good paper for you all. Thank you, guys.